took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly 1/8 of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life there is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forests, seagrass beds, All of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all pushing higher right now. In fact, we are looking at records on both the Dow and the S&P 500 index. Stocks pushing higher as corporate earnings help boost sentiment amid lingering concerns about inflation and growth. Crude oil, West Texas Intermediate, up 1.1%, $84.67 a barrel. The Western world's biggest oil companies have likely generated more cash than at any time since the Great Recession. According to analyst estimates compiled by Bloomberg, big oil is about to post the highest cash flow in more than 13 years. This ahead of the COP26 Climate Summit in Glasgow this month. Regina Mayer is Global Head of Energy at KPMG International. And on Bloomberg Surveillance this morning, she talked about balancing environmental goals with energy needs.
I encourage investors to look at the bigger picture. Don't demonize one side versus the other, because we need an all-of-the-above strategy to get to the climate goal objectives that we have together. So don't just look for what sounds green in the short term. Look at a balanced portfolio, because fossil fuels and hydrocarbons have to be a core part of the underlying part of the portfolio for a substantial period of time. And we will reduce the carbon footprint of those hydrocarbons. The industry is committed to that.
And again, West Texas Intermediate up now by 1.1%. ExxonMobil shares are up 1.8%. BP, the ADR is down 0.6%. Chevron up 0.4%. EOG Resources, among some of the oil names we track, up 1.1%. Pioneer Natural Resources lower by 0.2%. After the bell, lots of earnings. Among some of the names we'll be hearing from today: Visa, Alphabet, parent of Google, Microsoft, and Twitter, all after the bell. Facebook reported last night its shares down now by 5.2%. Recapping stocks higher, S&P up 0.3. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Got one word for you on this Tuesday.
What is it?
Avalanche.
Oh, I thought it was going to be earnings, but an avalanche of earnings works well for me.
That's exactly where I'm going. All right, everybody. Tuesday, October 26, 2021. Carol Masser, along with Tim Stenovic, live in our Interactive Broker studio, streaming on YouTube. We've got stocks setting records again, although we're definitely off our best levels of the session. Corporate earnings definitely outweighing some other concerns. We're going to talk about tech earnings. We've got Microsoft, Google, Twitter, Texas Instruments, AMD, Robinhood, Visa, all after the close.
Yeah, we're going to bring those to you live as soon as they cross. Among our most read on the Bloomberg terminal, Democrats' new tax target is $5 trillion in billionaire wealth, unrealized capital gains.
Exactly. We're going to talk about that. We're also going to get to the Bloomberg Big Take on how the world's top business cities, they're still failing working women. The story will definitely surprise you, I'm thinking, and also disturb you.
Also, Biden's banking watchdog picks gets mired in political spectacle.
This is a person I've never heard of, so you're going to want to know about this. And then we're going to also check in with the AT&T business CEO, Ann Chow, talk about the business outlook, but also about getting more women involved in technology. First up, though, the Market Drivers Report. Let's set that Business Week agenda. We've got a great duo to do so. Dave Wilson, stocks editor at Bloomberg News, in our Interactive Brokers studio. And on the phone from Westport, Connecticut, Cameron Kreis. He's global macro strategist here at Bloomberg News. Dave, kick it off with the look at the trade, because we did see some records, but we're definitely off our highs here.
We are, and this day has kind of done a 180 to some extent. Right. I mean, at the beginning of the day, it was sort of the big tech groups leading the way. Now you see, technology higher, but, consumer discretionary category where you find Tesla, that $1 trillion company, not one of the best performers, and communication services, home to Facebook and Google's owner Alphabet, is lower. And that's largely a Facebook story, given that the shares, which initially rose late yesterday after earnings, are now down more than 5%.
So what happened there, Dave? Because, like you said, shares were rising yesterday after the report came out and after the call, and even early this morning opened higher.
Well, I mean, that becomes a question. Inevitably, with earnings reports, it's a matter of what you choose to focus on. And, I'm looking at our coverage here, and we have Facebook analysts look past outlook miss to long-term growth. So I suppose, that provided some comfort, the growth potential for Facebook early on. But fact of the matter is, I mean, their revenue was not what analysts were looking for, and whether you look at the third quarter just ended or the fourth quarter. So, you have to wonder, I mean, to what extent are they dealing with issues, say, with Apple? The idea that they require apps to bring their users in via opt-in if they want to be able to track them. I mean, we saw that come up with Snap the other day, the owner of Snapchat. So, it's really a matter of, how do things unfold from here for a company which is arguably under a whole lot of pressure from a whole lot of government officials.
Focusing long-term rather than short-term. And let's just mind you that more than 80% of analysts tracked by Bloomberg recommend buying Facebook stock. Rosenblatt Securities joining that chorus today with an upgrade following the latest report. Cameron Kreis, come on in on this. You follow the markets from a lot of interesting angles. I love the column today. Is it real or nominal yields that matter for stocks? Which is it, because I do think we continue to watch the upward momentum overall and trying to get an idea of how it relates to the yield market, the treasury market.
Well, I hate to say that the answer is it depends.
You're sitting on the fence for us, Cameron.
Yeah, well, we always like to have neat and tidy answers to these sorts of inquiries, but unfortunately, a lot of times the world is a little more nuanced than that. So if we look at the data since 2004, for example, which is when we have inflation-linked bond yields, so real yields for a range of countries, so not only the U.S., but also the U.K., France, and Japan, what we find is that low and or falling, especially falling real yields, and they have been falling in much of the world, are associated with higher multiples. That sounds good. Low real yields, which is what we have, would support high equity value. High rising break-evens and rising nominal yields are also consistent with elevated or rising PE multiples. I think this is just a risk aversion story. When equity markets become very risk averse, fall, what happens to bond yields? Nominal bond yields, they tend to fall. What happens to break-even? They tend to fall. And when equity risk appetite marches back up, so too do nominal yields and break-even. So that would seem fairly conclusive. Lower real yields and higher nominal yields, higher break-even, which is what we've got, is supportive of higher multiples, which is also what we've got, QED, right? Well, not so fast, because 2004 is not a terribly long sample size. You could argue that the current regime, the current high inflation regime of high realized inflation, is really unlike anything we've seen over that period, except maybe a very brief window in sort of 2007.
Okay. We're running out of time, Cameron. You got to cut to the chase for us.
Okay, cut to the chase is the most compelling relationship is actually with spot inflation, CPI.
Okay.
And the higher CPI is, the more that CPI rises, typically the lower the PE multiple is. And that's the warning.
All right. Well, that's good to know and something to keep in mind. I know you've got another good column that sometimes it's just about earnings, which is going to be very relevant to today's trade. Excuse me.
A big thank you to Dave Wilson, stocks editor, and Cameron Kreis, global macro strategist. It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Today's number is 1.47 million. Basketball legend Michael Jordan's earliest known regular season game-worn Nike shoes sold at a Sotheby's auction in Vegas on Sunday for $1.47 million.
These are the real shoes, not NFTs, right?
Nope, these are real. You can put them on your little tootsies. Breaking a record for sneakers sold at auction. The shoes were worn in Jordan's 5th NBA game in his rookie season back in '84. This is why they're so cool. The same year that Nike and Jordan created his signature line of shoes and clothes. So beginning of his career, beginning of the collaboration, it sounds like those would be pretty cool to own.
That's why you got to save your shoes.
That's what I tell my husband.
Exactly. Let's get a check of the latest world and national news. Nancy Lyons in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Democrats continue to work on reaching consensus on President Biden's Build Back Better agenda, and they now have their eye on a billionaire tax, focusing on taxing the very wealthiest Americans.
The Bloomberg Billionaires Index shows that more than $5 trillion is held by Americans worth at least $1 billion, a group that has more than doubled its collective net worth in the past 5 years. But their tax bill didn't rise. Democrats are weighing a billionaire's tax, an annual levy on the investment gains of the wealthiest Americans. Advocates say it would combat inequality. Opponents say it's a socialist idea. In Washington, I'm Amy Morris, Bloomberg Radio.
Advisors to the Food and Drug Administration are discussing whether to recommend the Pfizer shot for children as young as 5. Today's meeting of the FDA panel is the first step toward expanding vaccinations to 28 million young children ages 5 to 11. If regulators agree, shots could begin early next month, using a third of the dose given to teens and adults. The Justice Department says it's made 150 arrests in a 10-month international investigation targeting drug trafficking over the dark web. 65 of those arrests were in the U.S. U.S. Deputy Attorney General Lisa Monaco says the busts involved 12 international law enforcement agencies across 3 continents.
The recovery of more than 500 pounds of illegal drugs which contained enough fentanyl for more than 4 million lethal doses.
Monaco says the operation also seized $31 million. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Master along with Tim Stenovic here on Bloomberg Business Week on this Tuesday. Interesting Bloomberg opinion piece by our own Tim O'Brien. Always a must read and very provocative and really get you thinking.
Yeah, we're in an interesting place as a country right now. Interesting is perhaps not the best word to use. I would
Sometimes
say polarizing, troubling. You have a lot of people focused on when and where to get boosters, and you still have a large portion of people who are refusing to get vaccinated. At the same time, we're seeing vaccine mandates, not just at companies across the country, but also happen in the public sector when it comes to police forces and firefighters as well.
Right, and they feel very strongly in some places, and in different, depending on the municipality or the state that they are within, there are different mandates, right, about what they have to do. And so Florida's governor, Ron DeSantis, is offering up jobs and bonuses to out-of-state police officers. And so political, offering an alternative, like how do you see this? But this is kind of the gamesmanship that's almost going on when it comes to COVID and getting vaccines.
It is, and we have to view this in the context of Ron DeSantis, his political ambitions beyond governor of Florida. This is somebody whose name is among the frontrunners for 2024, if President Trump doesn't run again, perhaps 2028 if President Trump does run again. Well, on Sunday, DeSantis told Fox News that he wanted police officers disgruntled about local vaccine mandates around the country to know that they are welcome in Florida.
Yeah, exactly. He said nobody should lose their jobs based off of these injections, he noted. He said he planned to introduce legislation in Florida that would offer new jobs and $5,000 bonuses to officers who relocate from out of state. New York Police Department, Minneapolis, Seattle. If you're not being treated well, he said, we'll treat you better here. But again, you put politicians and probably scientists and healthcare practitioners in the same room, and healthcare practitioners would say, this isn't political, this is science. But obviously politics is at play here.
We saw it come to a head yesterday in New York City downtown, where firefighters and police officers, among others, my wife saw it happen downtown. They were protesting this.
Yeah, so it's definitely an issue and something that we're definitely keeping an eye on here at Bloomberg. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks trading at or near records as corporate earnings help boost sentiment amid lingering concerns about inflation and growth. Lots of earnings. Going to be very busy after the closing bell. Among some of the big names reporting today, Visa, Alphabet, parent of Google, Microsoft, and Twitter. We'll keep you covered as those numbers break. Right now, we've got the S&P up 16. Again, all about earnings. That is a record. They're up 0.4%. So far this year, by the way, the S&P 500 index is up by 22%. The Dow up 76 right now, up 0.2%. NASDAQ higher by 26 for the NASDAQ Composite Index now. That is a gain of 0.2%. 10-year yield 1.62%. Gold down 0.8%, $17.92 the ounce. Bitcoin right now down 0.1%, 62,452 on Bitcoin, but a move higher for crude. Right now, West Texas Intermediate up 1.1%, 84.72 a barrel. Louisiana Treasurer John Schroeder says he is adamant that his state should not work with Wall Street banks that have curtailed gun industry ties, and that could cost J.P. Morgan Chase a $700 million bond deal. J.P. Morgan Chase shares, they're trading higher, up by 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So a lot going on, right? We've got advisors to the U.S. FDA. They're meeting to talk about whether to recommend Pfizer-BioNTech's shot for children as young as 5. This is something I know you've been watching really closely.
It is, and at the same time, we're also seeing hospital admissions declining sharply among U.S. children who have COVID-19, even more so than adults. That quiets concerns for now that the return to school could trigger a major uptick in viral transmission. I have to say, I'm optimistic about where we are right now.
I am too, but aren't you feeling like a little bit, as it gets a little bit colder and we're inside more, I'm just like waiting to see.
It's mid-October already.
Feeling good.
Feeling good.
All right. Fingers crossed. Let's see what our next guest has to say as we do our daily check on COVID and the pandemic. Dr. Darshak Sanghavi is a member of the C-suite at the digital healthcare platform Babylon, chief medical officer there. He was the director of preventive and population health at the Center for Medicare and Medicaid Innovation. That was during the Obama administration. He is with us on the phone in Boston. Dr. Sanghavi, nice to have you here with Tim and myself. How are you?
Great to talk to you both.
Well, it's great to have you here. First of all, we want to get into a little bit of what you guys are doing specifically at Babylon. But when you look at COVID and some of the headlines, how does it feel to you? Do you have the same optimism that Tim does, that even as it gets colder here in the East Coast, it feels like the numbers are settling and going in the right direction for the most part?
It does. We're certainly seeing that nationwide in the U.S. right now. The numbers are going in the right direction. And I think that we're in a good place now, at least with vaccinations on the uptick, and particularly with the availability of the third vaccination for individuals at high risk. So I am optimistic. You know, the virus has a way of surprising us, so time will tell. But I'm feeling better about where we're at now.
Dr. Sanghavi, what's a realistic way for us to think about the moment that this becomes endemic and is no longer a pandemic?
Yeah, well, I mean, I'd say that some epidemiologists are arguing we're already there right now, that it is endemic in the sense that, we are not going to go towards eradication, but rather probably repeated cycles of, as we see with the influenza virus now. So I think that's sort of probably what most people are thinking. But again, hard to tell for sure.
All right. So talk to us about your platform at Babylon. What exactly are you doing? Because we talked to a lot of companies and heads of companies that have definitely moved into telehealth and telemedicine much more aggressively, certainly because of the pandemic and post-pandemic. Tell us a little bit about your approach there at Babylon.
Right. So at Babylon, we are a digital health platform. So we enable healthcare. And the thing that's really exciting about Babylon is we're not just about that one-time visit, but rather taking care of that full spectrum of care. And that's supported by our model where we take what's called full risk. In other words, we're not just responsible for that one time somebody has a cough or a cold or wants something, for a one-time illness, but really we're trying to help them throughout their entire course. So that's through chronic illness, through hospitalization afterwards. And our digital tools really sort of are that, take them through that entire journey. So we're trying to improve the value of healthcare end to end, and that's really what distinguishes us at Babylon.
We saw a huge uptick in the use of telemedicine throughout the pandemic, especially at the beginning of the pandemic. I'm wondering what numbers you're seeing. What can you tell us about the data that you see on the platform that indicates growth will continue and strength will continue when this does become endemic and people are comfortable going back to the doctor's office?
Yeah, so we've seen, for example, just in the first half of 2021, this year during the pandemic, we've delivered about 1.6 million clinical consultations and had about 1.8 million AI interactions. So that's really sort of gives a sense of the regulatory and financial barriers that really were in the way before with telehealth. As they've been taken away and we've taken on a number of ways of making this more accessible, I think people really feel that this is extremely convenient. And our hope and the data we're seeing is that really will continue over time. It's just a new way of getting your care. It's much more around your schedule, not around your doctors or the healthcare systems.
Well, and so how's the infrastructure, the establishment, in terms of, it's interesting, healthcare programs and plans certainly opened up because of the CARES Act when it came to telemedicine during the pandemic. And we definitely have seen, I think the HHS announced the renewal of the public health emergency, the COVID-19 PHE, for another 90 days. So that's through about mid-January of 2022. But do you anticipate that these alternative ways, these digital ways of getting health care are with us forever, and that we'll get approval from regulators, that they will be all in, so that healthcare providers are also covering all of this?
Yes, so I do believe that digital health is here to stay. Once you've sort of uncorked that demand and people see how convenient it is, we're certainly seeing persistence around that. Now, the challenge is, will we get the regulatory flexibility and the payment flexibility to do it in a way that our patients have come to enjoy and expect? Our hope is that that will, in fact, occur. Even if that doesn't, that's the benefit of having full risk, because at Babylon, we're responsible for the full spectrum of care, so we can actually, in the U.S., then pay for the things and build the system we need without actually waiting for the regulators to catch up necessarily in all those areas.
All right. We're going to leave it on that note. Hey, listen, thank you so much. Really appreciate it. Dr. Darshak Singharavi, he's Chief Medical Officer at Babylon, on the phone from Boston. We should point out that today, interesting time for them, because Babylon completed its business combination with a SPAC, and trading today, it's under the ticker BBLN. And in fact, that SPAC is up 15.6% in today's trading session.
And just a little plug for our show tomorrow. The CEO of the company, Babylon, will be on Quick Take Stock at noon Eastern Time tomorrow.
Oh, good. So you'll have to continue that conversation, right? That's cool stuff. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stenovec, and coming up, we're going to talk a little bit more about an interesting story that's on the Bloomberg. In fact, it's the Bloomberg Big Take. It has to do with women in cities.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Can I just say, it feels like the calm before the storm because of all the earnings coming.
Oh, yeah. We got Visa. We got Alphabet. We got Twitter.
We got Microsoft.
AMD.
We got Hood, Robinhood.
Texas Instruments. The list goes on.
So we're going to get to that a little bit later on, folks. In the meantime, we do want to also bring you the Bloomberg Big Take. We'll get to that. It's how the world's top business cities are still failing working women. And you're going to probably be surprised about the angle on this one.
Yeah, who's on the list at the top especially.
Exactly. All right, back to your top business stories ahead of that earnings deluge. Here is Charlie Pellet.
Hi, thank you very much. You guys are looking ahead. Let me look back briefly here. Raytheon was out this morning. Those shares down 2.5%. The big story, though, the defense contractor Lockheed Martin, its shares down now by 12.2%. This morning, we also heard from UPS up 7.1%. GE out of Boston up 2.4%. The big news that we have not forgotten about, Facebook last night, its shares now trading lower by 4.85%. Bottom line, key takeaway, it is all about earnings. Tim mentioned some of those big names after the bell today. S&P right now up 17, up 0.4%. We've got the Dow up 72, up 0.2. NASDAQ up 39, a gain there of 0.3%. 10-year yield 1.62%. Spot gold down 0.8%, 17.93 the ounce. And West Texas Intermediate crude up 1%. 84.61 right now for a barrel of WTI. Quick check of Bitcoin right now. Bitcoin is down 0.1%, 62,484 on Bitcoin. Eli Lilly has lifted its full-year forecast as the Delta variant-fueled surge in cases spurred demand for its COVID-19 treatments, particularly among the unvaccinated. Shares of Eli Lilly right now, they are up by 0.8%. Advisors to the FDA are meeting today to discuss whether to recommend the Pfizer-BioNTech shot for children as young as 5. Hospital admissions are declining sharply among American children with COVID-19, even more than adults, quieting concerns for now that the return to school could trigger a major uptick in viral transmission. But what about the rest of the U.S. population? Dr. Amish Adalje, senior scholar at the Johns Hopkins Center for Health Security.
The virus isn't going anywhere. Everybody is going to get COVID-19. Hopefully it's a breakthrough infection enough and mild for them. And I think that's what we have to do with these first-generation vaccines. There may be vaccines down the line that induce more immunity in your nose, which may be more beneficial for preventing breakthrough infections. But I don't think that these vaccines are really going to be good for chasing breakthroughs in mild people. And we don't actually know how contagious these individuals are.
Dr. Adalje with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Taking a look at some of the vaccine stocks that we follow on a regular basis, Pfizer up 0.9%. Again, the German partner BioNTech, its ADRs down 0.5%. AstraZeneca's ADRs up 0.7. Moderna down now by 1.6%. J&J Johnson & Johnson up 0.9%. Recapping stocks higher ahead of earnings, S&P up 0.4%. I'm Charlie Pellet, and that is our Bloomberg Business Flash.
This is the Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
We're running on a financial system that's running on old technology.
We're seeing house prices reach fresh record highs.
What unfolds in midterms, we will no doubt see again in the next presidential election.
The Big Take on Bloomberg Radio.
It's today's Big Take. Its focus is the world's top business cities, and they are still failing working women. The story is by Ruth David and Adam Blenford. You can check it out at Bloomberg.com and by typing in NI Big Take on the Bloomberg terminal. Rebecca Penty is Solutions and Strategy Editor at Bloomberg Business Week. She joins us on the phone from London. Rebecca, safety, mobility, maternity, equality, and wealth. These are the 5 categories that Bloomberg went through in order to assess these cities. Toronto, number 1. How did it get to the number 1 spot?
Well, you're speaking to someone who's from the Toronto area, but I can assure you that did not influence the outcome. I'll take you back to how this originally started. I'm here based in London, and back in March, a story exploded here in the city, and it remains a massive story. That was the death of Sarah Everard. She was a 33-year-old marketing executive who was walking home through a London park, and she was abducted, raped, and murdered by by a London police officer. This just shook the city to its core, and a refrain on social media was, she was just walking home. So Bloomberg reporters, in the wake of that killing, thought, let's take a look at how safe these major business hubs are for working women. This was a young working woman who was walking home. And we commissioned a bespoke survey, surveyed 200 women in each of the 15 cities that we looked at. We sifted through publicly available data on crime, on wealth, on equality. We decided to expand this beyond just safety and look at how are working cities enabling women or not enabling women to succeed. And what we came out with is Toronto at the top of the list. We can get into that a little bit later. But what I will say is that what we found, the big takeaway, is that inequality is rife everywhere. Toronto was 3.66 out of a possible 5, and that was the best.
Well, this is what...
In Sao Paulo, right at the bottom.
Rebecca, I'm just going to say, looking through the numbers, and, as you said, a scale of 1 to 5, and there's just a few 4s or just over 4, but basically, even though Toronto's the top, the point is there's really no city that, if you look at those 4 metrics, those key 5 areas, that nobody's really doing well, especially on all fronts.
Yeah, and some of it was quite surprising to me, but once we sifted through the data and did our interviews with women in each place, we also featured voices, testimonies from working women in each city. We started to piece together where cities were lacking. So in Asia, for example, the Asian cities, Tokyo, Seoul, Hong Kong, did very well on safety, but yet in Japan, for example, only 13% of managerial jobs are held by women. That's insane to me.
You really want to use a different word, don't you? It's crazy. It's crazy, right?
It's crazy. And what we found is that they don't have the maternity provisions in place. Men are not encouraged to take parental leave, so the burden falls on women.
Right.
In Germany, where they do have the maternity provisions, we found that there is a lack of childcare options. So women end up staying home anyway and don't go back into the workplace. And there you have major shortage of women in senior roles in business and in politics, despite the fact that the country's been run by a female Angela Merkel for
Rebecca,
years.
We've got to run, unfortunately, but I highly recommend, and Tim and I will put it out on Twitter because there's so much information there. Rebecca Penty, thank you, Solutions and Strategy Editor at Bloomberg Business Week.
Let's go to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is in our 99.1 newsroom. Hey, Nancy.
Tim, President Biden is pressing for infrastructure and economic bills to take shape before he goes to Europe later this week. West Virginia Senator Joe Manchin is one of the lawmakers who has expressed concerns about the bills. His vote is crucial. During an interview with Bloomberg's peer-to-peer show host David Rubenstein, Manchin says he believes the infrastructure bill will be done within a day or so.
I would like to hope it passes Wednesday evening. The president needs to take something with it by the end of the week.
Manchin says they're all negotiating in good faith. Executives of TikTok, Snapchat, and YouTube are defending their companies amid growing concerns about the negative impacts of social media on kids. During a Senate hearing today, Snap's VP, Jennifer Stout, says her company is focused on addressing the unique needs of kids.
Technology companies must take responsibility to protect the communities they serve. If they don't, government must act to hold them accountable.
Stout says Snap is developing new tools for parents to better oversee how their kids are using the app. A group of experts who advise the Food and Drug Administration on vaccines is holding a day-long meeting today to discuss the Pfizer-BioNTech proposed COVID-19 shot for kids from 5 to 11. Data shows the shot is highly effective, and the FDA staff says the benefits probably outweigh any risks. The Fall Classic begins today. Game 1 of the World Series between the Braves and the Astros will take place in Houston. It's the first appearance since 1999 in the World Series for Atlanta. Houston is making its first appearance since 2019. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Master, Tim Stanovic in our Interactive Brokers studio, streaming on YouTube. Hello, everybody on YouTube. Okay. A couple of stories from the financial industry. One has to do with Ray Dalio and Larry Fink.
Yeah, they say that they'd pay more taxes if the funds were, well, in their opinion, spent well. Here's what Dalio, the founder of the hedge fund Bridgewater Associates, said at Saudi Arabia's flagship investment conference. Quote, "I would support anything that is going to have the effect of being spent on increasing, creating equal opportunity, and greater productivity. If it accomplishes those things, I would support it. I'm not sure that it does."
Yeah, the wide-ranging discussion. This was happening at the Saudi Arabia flagship investment conference. They touched on plans drawn up by Democratic lawmakers with President Biden's support to tax ultra-high earners. The proposal would set the so-called billionaires' income tax at $1 billion in assets. We're going to talk about this a little bit later on our broadcast, or 3 consecutive years of $100 million or more in income, which would hit some 700 taxpayers. Oh, my God. There's a lot of debate here. And, you know, spending it in a good way, in a good use, there's a lot of room for interpretation.
I was just going to say that. Everybody has their own definition of what it means to see spending that they approve of. And I think that's why you see a lot of these very high net worth individuals focus on philanthropy and philanthropic giving.
Which is great.
Because that's great. Absolutely, it's great because that's where they believe the money should go.
Yes, exactly.
Irrespective of taxes.
Yeah, I mean, Larry Fink, he's the chief executive officer of BlackRock. He said he pays a tax rate of about 55% because he's based in New York City. He says if we could find solutions where the money could be directed in a proper way, I have more to give. I think when we talk about taxes, we always just think about it at the federal level. I'm not even sure where that money is well spent now. And some would argue the government has become massive. And are we spending it in the most constructive way? And that's a fair argument as well.
And I think also there are questions about to what extent Democrats can actually get their plan passed, considering what we've seen from Senator Manchin and Senator Sinema.
But there's something we have to think about when there's such a gap between the wealthy and then so many who have not, that there's something wrong economically, and that is certainly worth looking deeper into.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks and records, the Dow, the S&P, NASDAQ all advancing right now. S&P up 14, up 0.3%. We'll give you the why in a moment here. The Dow up 70, higher by 0.2%. NASDAQ up 21, higher by 0.1%. The why all comes down to earnings. We got a flood of big names after the closing bell today. Got to keep it locked into Bloomberg Radio for reports out of Alphabet, Microsoft, Twitter, and Visa. And, of course, find out how Asian markets respond to any of those numbers tonight. Stocks trading at records, corporate earnings helping boost sentiment amid lingering concerns about inflation and growth. We've got the 10-year yield right now at 1.61%, 10 years up 4/30 seconds. Spot gold down 0.8%, $17.93 the ounce. And West Texas Intermediate crude up 1%, $84.56 a barrel on WTI. Again, recapping, stocks higher, S&P up 14, up 0.3%. I'm Charlie Pellet. That is our Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Massar, Tim Stanovic. We are live in our Bloomberg Interactive Brokers studio here at Bloomberg headquarters. We are on YouTube, folks. We are going to have a ton of tech earnings. I know we keep hinting at it, but it's important because earnings and certainly technology, which is such a big or has been such a big momentum play in these financial markets over the last year and a half, will tell us a lot about social media, advertising. We're going to hear from AMD. We're going to hear about the semiconductor sector as well.
Texas Instruments, let's start chronologically because we're expecting that one to cross just after 4 p.m. Shares are up 20.3% this year. Sounds good, but it's underperforming the SOX, the Philadelphia Semiconductor Index.
Yeah.
Keep an eye out for potential commentary about supply chain and what the company's doing when it comes to inventories, if it's increasing inventories on its end to try to prevent supply chain challenges.
Well, and I also do wonder, have they seen any forward ordering? In other words, are people ordering extra to make
hoard?
sure? Yeah, basically, we've done it with toilet paper. Why wouldn't companies do it with chips?
Yeah.
I'm not kidding. And on that front, we're going to hear from AMD. What's interesting about that, it's, the big player, little one. We heard from Intel last week. They did beat in terms of earnings, but some concern when it came to slowing revenue growth. And also, they forecast declining margins. So margins will be very, very important when it comes to what AMD has to say, because they have been ticking higher, and it might be this quarter or potentially maybe the next one where they actually break 50% when it comes to gross margins, and that's significant.
Among those include Microsoft as well. That company reporting earnings after the bell. All eyes will be on Azure growth, the cloud division of Microsoft.
All right, so much to get through. Right now, though, we do want to get to and highlight a story from Business Week. You haven't heard of her, at least maybe not yet, and yet she is President Biden's pick to be the U.S. banking watchdog if politics allows. Here with that story is Bloomberg Business Week editor Joel Weber. He is in our Interactive Brokers studio. Robert Schmidt wrote the story. He's our finance reporter at Bloomberg News. Joel, this is when you guys always step up to the challenge and you bring us somebody that we need to know about, have on our radar, and she's a little bit controversial, a lot controversial, actually.
That's right, and we're talking about Cornell law professor Saul Omoruva, who is really turned into this political, has been at the center of this political hot potato fight in D.C. And would you ever expect anything else? But sometimes you just find someone who really lights up the room, and that's clearly what's happening with this nomination.
The comptroller of the currency. It's a branch of the Treasury.
Oh, yeah, sounds boring.
But it's not. It sounds so boring until you hear Republicans call her a Marxist, and then you're like, wait, what?
And they're looking at her college thesis. They're looking into where she was born.
It's literally, yeah. So she is a graduate of Moscow State University. Came up through Kazakhstan, was born in Kazakhstan when it was part of the former Soviet Union, came to the U.S. in 1991. So all of that, where you've come from and where you studied, has just become fodder for Republicans. And because of the razor thin margin, we don't know how this one's going to play out yet. but it embodies this, lack of bipartisan spirit. It does have this, it's got a wonky title, but it is an important role that Wall Street really cares about.
Well, that's what I had to remember. Like, okay, what does this individual do? And especially at a time where the financial sector is going through, a lot of disruptive changes, right? Whether it's fintech, whether it's cryptocurrencies, she would have a lot of oversight of that.
Yeah, it's besides regulating the national banks, it's all these these burgeoning areas of finance that right now have sort of little oversight of government. And so in theory, this nomination, you could be stepping into a really important role. She's no fan of Wall Street, so it's interesting because
There's a certain word she uses to describe them, and you're going to have to read the story to find out.
Because you can't say it on the radio.
Well, we could, but we might be
you get the little
quickly.
I'm not saying it.
So she's basically not loved by certain quarters, loved by the progressive wings of the Democrat Party. Who obviously have turned this in. They say that all of this is red baiting, and it harkens back to the old McCarthy era. So it just brings out everybody's best in DC. It's like best feet forward for these nominations sometimes.
Well, let's bring in Robert Schmidt, finance reporter for Bloomberg News. He's with us from the Bloomberg 99.1 studio in Washington.
He wrote the story.
Robert, bring us up to speed on what parts of her background specifically Republicans are latching onto, and how, in some cases, that's actually increasing support, as you write, among Democrats.
Yeah, hey, thanks for having me. And as you know, the Senate is 50-50, and this is a confirmed position. So she really, it'll be tough to get her confirmed if there's one Democrat that doesn't support her. This thing has devolved. What was interesting to us is this is kind of an obscure professor. It's an obscure agency that a lot of Americans haven't heard of, the Office of the Comptroller of the Currency. And it quickly devolved from stuff we're used to seeing, which was our debates about policy, and into something about her background. And she was born in Kazakhstan in the former Soviet Union, went to Moscow State University, and as the Republicans have been pointing out, was on a Lenin scholarship. So there's kind of they're definitely suggesting that maybe she's still a communist supporter.
She's denied that, obviously, but she was also a lawyer for big banks. That's an
she
important part of her
was.
resume.
Yeah, and she worked in the Treasury Department during the Bush administration.
So, Robert, what do we think if she were to get nominated? What would be her sort of top priorities? Do we think?
Well, the people I talk to that know her say that she really focuses on the consumers of banks rather than the banks themselves. And that would be a big change from the OCC, which is generally, it's an important agency and it regulates over 1,100 banks. But it's also a place where banks feel very comfortable talking to the heads and with the regulation, and so they think it would be kind of a sea change in that area.
But how fearful is the traditional big bank industry? I mentioned a documentary. We're not going to mention the name, but everybody should definitely go read your story so that they can see it, to see how she feels about kind of some of those who run the big banks. But she did say in this documentary, she spoke of the law as a way to reduce the economic rewards for self-serving behavior. And so she is looking at the industry and the people behind it. I mean, is it safe to say that the big bank and the CEOs who run those big banks, they don't like her?
Yeah, they're definitely concerned about it. And they say, well, we're not interested about her background. What we're interested in is her scholarship. And she has had some ideas that are novel and some would say radical. One would be making the Federal Reserve an actual bank where people could open checkings and savings accounts, and it would take a lot of business away from the banking industry.
We have to leave it there. Go watch that documentary. Just check out the story. I don't know. It made me chuckle when I read it. Robert Schmidt, thank you. Finance reporter at Bloomberg News. Joel, that's going to be in the upcoming issue?
It is, finance section. And many more, including, something we'll talk about tomorrow. Ooh, that'll be a big take.
Deep tease. Joel Weber, nicely done. Editor at Bloomberg Business Week. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, October 26. We've got the Dow, the S&P, and NASDAQ higher. The Dow and S&P on track for record closes today, with the S&P up 17 right now, up 0.4%. The Dow is up 89, up 0.3. NASDAQ up 36. That is a gain of 0.2%. Stocks at records as corporate earnings help boost sentiment amid lingering concerns about inflation and growth. The 10-year yield right now 1.61%. 10 years up 4/32. Spot gold down $13 the ounce, lower by 0.8%, $17.93, back below 1,800. West Texas Intermediate crude rallying 1%. WTI up 83 cents a barrel, 84.58 on WTI. Bitcoin down $200. Bitcoin 62,333. Bitcoin lower by 0.3%. Earnings front and center, and among the companies reporting after the close of trading today, Visa, Microsoft, Alphabet, the parent of Google, and Twitter. So what will Twitter need to show? Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
What Twitter needs to show is consistent user growth and ad pricing growth. We saw from Facebook last night that their ad pricing growth has moderated, partly due to IDFA, partly due to users spending less time on it. Guess what? Twitter could be the beneficiary of it, so could be Alphabet and others, and that's what we want to see.
And right now, Twitter shares, they are lower by 1.3%. He mentioned Facebook. Facebook shares down 4.5%. Also after the bell, Visa down now by 0.6%. Microsoft up 0.5%. Alphabet, parent of Google, up by 0.8%. Again, recapping, 10-year yield 1.61%. Stocks higher. S&P at a record up 18, up 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Among our most read stories on the Bloomberg. Actually, Tim, is it still our most read story on the Bloomberg? Pulling it up, and it's among our most read. It's one that looks at the Democrats' latest tax proposal and their target U.S. billionaires that lay claim to some $5 trillion ka-ching in wealth.
The story by Ben Steverman, Sophie Alexander, and Scott Carpenter. Ben Steverman joins us now. He's personal finance editor at Bloomberg News. He's with us from New York City. Ben, explain exactly what Democrats want to do, because they're targeting about 800 U.S. billionaires who have about $5 trillion.
Hashtag really, really rich.
Yeah, the ultra rich in this country.
Yeah, so one thing that's been frustrating Democrats and progressives for a while now, and you saw it come out in the proposals by people like Elizabeth Warren and Bernie Sanders for a wealth tax, is that billionaires don't really pay taxes that are really commensurate with their wealth. So a lot of the wealth that goes to billionaires, as you know, is in the form of unrealized capital gains. So it's the stock goes up and up and up of like an Amazon for Jeff Bezos or a Tesla for Elon Musk, and all that is not taxable income. That's just it's only taxable. Investments are only taxable when they're sold. And so what Democrats would like to do is unlock some revenue from these sort of a broader definition of income. And what they're trying to do is focus this it would basically be an entirely new tax system focused on billionaires. I think the criteria they're talking about now is people that have $1 billion or more, or who make more than $100 million in 3 years. And if you make more than $100 million in 3 years in a row, you're probably on your way to being a billionaire. So the idea is, we haven't seen the full details, but the idea is that folks would have to pay a tax every year on any publicly traded assets, and then on any privately paid traded assets, you would have to pay extra when you sold them to reflect the fact that you weren't paying along the way.
So every year, if you have a little kitty or a big kitty of a bunch of investments, let's say in the market or what have you, or private equity or whatever, a hedge fund, you'd have to pay a tax on that.
Yeah, you have to pay a tax on the gain, or if you had a loss, you would get a deduction for that loss.
So help me out here, because Tim and I talked earlier about this investment conference that's going on over in Saudi Arabia, and Larry Fink of BlackRock said, I think when we talk about taxes, we just always talk about the federal level. He basically said he pays a tax rate of about 55% because he's based in New York City. Is he right?
In a lot of ways, yeah. I mean, he probably is right that he's paying by a certain definition of his income, right? But Larry Fink has I think, huge holdings in BlackRock, and he's probably not selling those, and he's probably not counting the increase in the value of BlackRock shares over time in his income. So, and that's the thing that Democrats are trying to get at here. They're really trying to shift the debate and have a broader definition of income, one that is controversial, especially among certain billionaires, but maybe is more reflective, you could argue, of their actual true economic income, their true economic power in our economy and in our society.
Ben, we have to talk politics here because a plan is just that right now, a plan.
Yeah.
And I have to think about two senators in particular who have helped whittle away President Biden's ambitions, Kyrsten Sinema of Arizona and Joe Manchin of West Virginia. What do moderate Democrats think of a plan like this?
I think we're going to have to find out over the next few days as they absorb this idea, which is a new idea for a lot of people who aren't tax experts. I think we're kind of at this weird stage of these tax debates where maybe this is a sign we're getting closer to the end, where everyone has sort of having to consider their second or third or fourth favorite ideas for raising revenue. There are a lot of possibilities out there for how Democrats can raise revenue, but Kyrsten Sinema from Arizona has said that she does not want to reverse the rate cuts that were put in place under Donald Trump. So no rate cut for corporations, no hiking the rates for corporations or wealthy people or capital gains, which is all things that Biden had proposed, and that even Joe Manchin from West Virginia seemed to be open to.
What's
doing
interesting,
that is very simple, but doing this is a much more complicated option.
What's really cool in your stories is you get to some of the big billionaires that would be impacted, whether it's Elon Musk, Jeff Bezos, you could say would be hugely affected by the proposal. Mark Zuckerberg, too, because their fortune is almost entirely in the companies that they created, right? So that they, from the get-go, if this passed in day one or year one of the tax, they would be required to pay taxes on any built-in gain on their tradable assets up until now. So that could be massive, right?
Yeah. I mean, it could be, the top rate on capital gains right now is 23.8. So you'd have basically a fifth to a quarter of these guys' stakes in, these are 150, $200 billion stakes in these companies, potentially that they would have to pay in taxes. Now, the law will make a provision that they can pay that over 5 years, wouldn't have to go all at once. Advocates of this say, these folks can borrow, which is something that some of them already do. They could borrow against the shares to pay the tax. Wealthy people have way more resources and ability to pay than others do. But still, could really change almost the ownership of these corporations that are some of the leading tech companies in the country.
Hey, Ben, very briefly, because my head is spinning just in the last 15 seconds, does that mean that they would get taxed every year on the same assets, or would it be a one-time thing?
No, what you would get, after the first year, you would pay on the built-in gains that you had up until now, and then for every year afterward, you would pay taxes or get a deduction on your gain or loss
From that point
year,
on.
in that calendar year.
But Larry Ellison owns a Hawaiian Island, or most of it, and then a lot of the housing stock in a grocery store. How do you value that, Tim?
Business school students, work on it.
All right, accountants, get ready. Ben Steverman, you are our tax expert. He's also personal finance editor here at Bloomberg News, on the phone in New York.
Let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Tim, the powerful storm that's been battering the U.S. Northeast is expected to inundate the region with more rain and possible flash floods through tonight. New Jersey Governor Phil Murphy says residents need to be prepared.
Rain totals of more than 4 and perhaps up to 5 inches in some areas are still possible before all is said and done.
Murphy says the high winds will also be an issue. Residents should not be surprised if they lose power. Climate concerns are growing among Americans. A new poll by the Associated Press and the Nork Center for Public Affairs Research and the Energy Policy Institute finds 59% of Americans feel the Earth's warming is very or extremely important to them as an issue. That's up 10 points from 2018. An FDA advisory panel is considering an emergency use authorization for the Pfizer-BioNTech COVID vaccine for younger children. If approved, it would apply to kids 5 to 11. The FDA's Dr. Doran Frank says the formulation is key.
We are considering the use of an age-appropriate dose level because, as we pediatricians are fond of saying, children are not simply small adults.
Fink says that dose would be about a third of the adult dose. 40% of the current pediatric cases are in kids between 5 and 11. Law enforcement officials in the U.S. and Europe have arrested 150 people and seized more than $31 million in an international drug trafficking investigation stemming from sales on the darknet. The Justice Department says the arrests are connected to a 10-month investigation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Right, Nancy Lyons in our 99.1 newsroom in the nation's capital. A couple of stories we want to bring to your attention. One has to do with Bitcoin. A study out there that finds the top 10,000 investors in Bitcoin hold 1/3 of the token. So again, it's really the majority of it in a small group.
Yeah, it's important to keep this in mind because the ownership is still concentrated of Bitcoin in just a few hands. And Bitcoin's promise was, and cryptocurrency's promise, is the idea of it being more egalitarian than traditional fiat currency.
Yeah, this is a study by the National Bureau of Economic Research. And crypto enthusiasts we know have long wondered, who the largest owners of Bitcoin are since the early days of its existence. And as you said, it can be a little, the whole idea, right? This is why, we don't talk about the legitimization of it, and we're moving in that direction. It feels like it goes against what cryptocurrencies are kind of about.
Right. It's difficult to determine the concentration of ownership because many of the largest addresses don't often represent individuals, but exchanges or other entities that hold Bitcoin on behalf of other investors. They were able, though, to use a data collection method that differentiated between addresses belonging to intermediaries and individuals. So researchers at NBR were able to find the former controlled about 5.5 million Bitcoin at the end of last year, while the latter controlled about 8.5 million.
Well, when it comes to miners, the concentration of miners even more profound. According to the data, the NBR found that the top 10% of miners control 90% of the Bitcoin mining capacity, and just 0.1%, about 50 miners control 50% of mining capacity. So talk about, it's a little bit of a monopoly or something like that, right? Hey, listen, one story, because we're going to talk about China in just a moment. There's another story by our Bloomberg News team. It says Chinese authorities telling the billionaire Hua Kang-yan to use his personal wealth to alleviate China Evergrande Group's deepening debt crisis, according to people familiar with the matter. So basically pony up. I don't know that I pronounced that correctly.
This is the directive. It goes to the Evergrande founder, and it came after his company missed that September 23rd deadline for a coupon payment on a dollar bond, said the people asking not to be identified discussing a private matter.
Wow. Right.
You got it. Hey, you're on the hook.
This is your company.
Yeah.
Basically.
Sending a message, too.
Yeah, exactly. And the FCC sent a message, too, to another big Chinese company. We'll talk about that in just a moment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks, they're at records right now. The Dow, the S&P, both at new highs. NASDAQ also advancing. Let's get all the details. Lots going on today. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading in the green, but are off their best levels. Dow's currently up 109 points. S&P's gained 19. NASDAQ is higher by 33. The U.S. 10-year yield at 1.62%. Gold is down 13. Transports rise 145 points. And among the main 11 S&P sectors, energy and utilities led. Only industrials and telecom were in the red. Leaders to the upside in the Dow, Cisco and UNH, while Intel and Walgreens led to the downside. And after earnings, Facebook fell as much as 5.8%, fell below the key 200-day moving average, and defense name Lockheed Martin plunged as much as 13%. In deal news, DraftKings won't bid for Entain, and wrapping things up, Microsoft and Google report after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, Bill, we thank you, and to hear live breaking news over at your Bloomberg-type Squawk SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. A lot going on this Tuesday, and that includes the U.S. FCC, Federal Communications Commission, voting to revoke licenses held by China Telecom and pledging more steps to purge the U.S. market of Chinese tech companies in the name of security. It was a red headline when it crossed the Bloomberg terminal earlier today. Here with what you need to know, Bloomberg News is Todd Shield. He covers technology in the FCC. He's with us on the phone from Maryland. Todd, walk us through exactly what the FCC did today and the significance of it.
Yeah, this is an interesting move. It's been brewing for a number of months or years that the FCC has examined the role of Chinese telecommunications carriers for freedom in the U.S. market. And Lord, these carriers do not have a big share in the U.S. market, but they do have links to Chinese networks, and that's the source of concern by U.S. security agencies and increasingly now the Federal Communications Commission. So today, it said that China Telecom Americas, a subsidiary of big China Telecom based in Beijing, the FCC said China Telecom Americas poses a threat of espionage due to its control by a state-owned company and thus its control by the Chinese government, says the FCC. The company says, no, it's not controlled by the Chinese government. But there it sits, the FCC on a 4-0 vote would purge the U.S. of this company within 60 days. They've got to shut down within 60 days unless something happens.
Todd, you write that since 2019, the FCC has moved against telecom equipment maker Huawei Technologies, part China Mobile from the U.S. market, moved toward ending authorizations for China Unicom America, specifically working for more. Is there any difference between the policy enacted under the Trump administration from the FCC versus what's happening under the Biden administration?
Yeah, this is interesting, and here was a question we all had over the months as we changed administrations. But it appears not, at least in regard to telecommunications. There's the same sort of emphasis, the same rhetoric, and the same steps are being taken, with perhaps more to come. One of the FCC commissioners is proposing similar steps against a big drone maker, DJI. So on it goes, and not a real change in rhetoric or action.
You know, it's interesting. I mean, this is the backdrop of, beginning certainly during the Trump administration, continuing even into the Biden administration, fair to say, in terms of the growing tensions between the United States and China. Is it the result of that, or is that the catalyst, or is it true oversight and really having some serious national security concerns?
I always try to parse out the chicken and the egg here. I'm not really sure. I do know that intelligence agencies have for years now, at least since 2012, warned about the capabilities, the digital capabilities of Chinese companies in the U.S. market. And that's because the world has changed. When we were analog, a phone line was a phone line. Now your phone's a beacon and it broadcasts to the world where you are and potentially hoovers up data about everything, people around you and devices around you. So it's a much different world now than it was 20 years ago. So how much of it is just the technology is so much more capable? How much of it is the tensions are just higher? probably a mix of it all, to tell you the truth.
Todd, you really piqued my interest with the mention of the drone maker DJI. I was in Prospect Park over the weekend and saw somebody using a DJI drone. Well, I should say they were trying to. They couldn't quite figure out how to make it fly, and that's how I was able to see it was a DJI drone. What do you think the regulators' concerns are with a company like that?
They're afraid that those drones can just go around and take pictures and collect Wi-Fi addresses, and who knows what you can do with a drone like that in terms of collecting, soft intelligence like this. And every time I talk to an intelligence professional, they say, well, it's not so much a secret. You get patterns of movements. You figure out where people are, and I don't know. You could fly one perhaps outside of a military base. When shift change is, so it gives you an inkling on what's going on. Things like that. So it's the power of data compounded and surveillance compounded. A zillion little instances add up to a form of pointillism that forms a detailed picture. So I'm told. I've never done.
What's more to come? So what we should be as investors, who might be watching this market and watching some of the Chinese companies. I mean, it's certainly the tone towards Chinese companies has definitely changed because of Evergrande and the Chinese, clampdown on so many different industries. But what should we be watching out for when it comes to maybe more oversight of China tech?
Well, we're going to see, definitely don't be surprised if the FCC acts against China Unicom or Pacific Networks and ComNet. Ditto the drone matter we just spoke about. Today, the FCC chairwoman said that they're making it a little bumpier to get permission for submarine cables, which is more data transfer. Interestingly, big companies, Google, Facebook, et al., those kind of folks are laying big cables across ocean floors. And now it's going to be a little harder for them to get permits. They're going to undergo more scrutiny. So we're going to see more. Anytime you're moving data, there's going to be question marks. So that's kind of the broad point coming out of all this.
Does this have ramifications with how Chinese regulators treat American companies trying to do business?
That's hard to tell, isn't it? So far, we haven't seen many repercussions that I know of in China, but China watchers may contradict me on that. And U.S. telecom operators, I don't think move big into the Chinese market, so I don't think there would be a tit for tat to be had here. But, there may be other retaliatory steps possible, but I'm just not sure on that.
All right, Todd, going to leave it there. Thank you so much. You really laid it out so well. Bloomberg News is Todd Shield. He covers technology and the FCC, joining us on the phone in Maryland. But it's, greater oversight, right, of foreign companies, particularly some that we are kind of frenemies with.
I'm still thinking about those drones. That's a big deal.
I don't like it. We were out on the water this summer and had a drone. Somebody was playing with a drone. And we were like, it just freaked us out.
Feels a little weird to be standing somewhere and a drone just comes over. You have no idea where it comes from.
Feels invasive.
Yeah.
Absolutely.
That's happened to me.
Yeah, right? Not so cool. What is cool, though, is Dave Wilson and his chart of the day, and he's coming your way in just a moment right here on Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Did you see we just got a news alert? Tom Brady threw a Bitcoin to a fan who returned a touchdown ball, or touchdown ball 600.
Okay,
He threw his 600th touchdown pass, and now he wants to chuck a Bitcoin to the Tampa Bay Buccaneers fan who returned the ball.
Okay, so Yahoo Sports spoke
nice.
Yahoo Sports spoke to some sports memorabilia experts. The ball could be worth between $500,000 and $750,000.
What's Bitcoin now? Is it 60 something?
60,000 and change.
Maybe a few more Bitcoin, Mr. Brady?
Brady said last night that the fan removed some of his leverage when he gave the ball back so quickly.
All right, we're going to get to the chart of the day. Right now, though, we've got to get to Charlie Pellet, who's being so patient. Sorry, Charlie.
That's all right. We've got a lot of news going on today, Carol and Tim, but I first want to begin with the headline from the Bloomberg Professional Service. Federal Trade Commission says annual cigarette sales increased for the first time in 20 years. Stocks higher across the board. In fact, we're on track for records here. 28 minutes to go until that closing bell. The Dow, the S&P, NASDAQ all advancing. The Dow, S&P, any close higher will be a record today. S&P up 16 right now, all about earnings, up 0.4%. The Dow up 89, up 0.3. NASDAQ up 25, up by 0.2%. 10-year yield 1.61%. Spot gold down 0.7, $17.94 the ounce. West Texas Intermediate crude up 1%, $84.63 for a barrel of WTI. Eli Lilly has lifted its full-year forecast as the Delta variant-fueled surge in cases spurs demand for its COVID-19 treatments, particularly among the unvaccinated. Lilly shares up 1.2%. Advisors to the FDA meeting right now to discuss whether to recommend the Pfizer-BioNTech shot for children as young as age 5. Hospital admissions are declining sharply among kids with COVID-19, even more so than adults, quieting concerns for now that the return to school could trigger a major uptick in viral transmission. But what about the rest of the population? Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
There are people that are having a hard time adjusting to a new world where COVID-19 is always going to be there, that there's going to be COVID-19 cases 50 years from now. And I think that's because people weren't told that ahead of time. And public health really went on this abstinence-only approach where never do this, don't do this, this is always going to be risky, and didn't teach people how to risk calculate to adjust their lives or recalibrate their lives with the fact that COVID-19 is going to be a respiratory virus that we deal with year in and year out, and you've got to learn how to cope with it.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine names that we track, Pfizer up 1.3%, its German partner BioNTech. The ADR is down 0.8%. AstraZeneca's ADR is up 0.9%. Moderna lower by 1%. Johnson & Johnson up 1.1%. Ton of earnings after the bell, among them Visa, Microsoft, Twitter, Alphabet, parent of Google. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
The bride's family, whoever you are. I love the electric slide. This is for my brother Bill.
Nancy Lyons got it too just now.
Here's the thing.
Nancy, are you dancing? She's dancing. We know
Here's
it.
the thing. The electric slide is actually the dance that was made up to go along with that song called Electric Boogie. Now, here's the thing.
This is
There are Bob Marley connections all over this.
What?
It was originally written and recorded by Bunny Livingston, who renamed himself Bunny Wailer. He was in the group. And that version that you heard was done by Marcia Griffiths, who was one of the I3s, Bob Marley's backing vocalist in the Wailers. Way.
That is so cool. That is just a fun trajectory of the history of that song.
Absolutely.
All right.
Perfect song for your chart.
Yeah,
it's electric.
And after this, we're going to do the electric slide in the break for YouTube folks. Okay, so tell us how this gets us to the chart of the day.
Because it's all about Tesla. That's pretty electric. I mean, not just the cars they make, but the gains we saw in their market value yesterday when the shares rose 13% and the company surpassed $1 trillion. Well, to put it in context, Tesla added about $118 billion in market value. It's one of 18 companies in the MSCI World Automobiles Index. It basically tracks developed markets. So you're talking about US, Europe, Japan. That one-day increase, bigger than the total market value of all those companies except Toyota.
Wow.
Which is crazy.
So they added a General Motors in half, basically, yesterday. That's how, outstanding, I guess you could say, or notable the performance was. I mean, it's just staggering. In any case, if you haven't seen that chart already, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I spoke with Ross Gerber, the CEO of Gerber Kawasaki Advisors, earlier today on Quick Take Stock. He's a big Tesla bull. He's all in on Tesla. He said, hey, Tesla's not a car company. So I appreciate the comparisons, but it's a tech company.
Well, there is that argument, and it's pretty clear that if it were just thought of as a car company, that it wouldn't have the $1 trillion valuation. So I'm sure there are a lot of investors that look at the company the way Gerber does, but think about it. What do they have beyond cars? They have, solar, right? When they
tiny.
Yeah, tiny, and they have ideas to do other things. But the business really is an electric car business at this point.
It absolutely
and
is.
battery company.
Yeah, that's true. Batteries through agreements with companies like Panasonic.
Right.
Absolutely.
Well, I mean, this is why Kathy Wood would argue in terms of their analysis, how they do it. She's got analysts, whether it's a Tesla, it's a bunch of different people looking at it because it does cross so many different things. And if you think about our financial companies are increasingly, they're technology companies, they're finance companies. I mean, there's a lot of moving parts. They're not necessarily pure plays anymore. All right, king of the electric slide. What do we got for stock of the day?
We've got World Acceptance, the ticker WRLD, or World without the O. It's a consumer finance company, came out with fiscal second quarter results, and suffice it to say, they did not go over well. Revenue beat analyst average estimate in the Bloomberg survey. Earnings did not, though. And it's all about, a bigger provision for credit losses than the company had a year ago. So, that's the thing about growth. You take the risk, especially in this business, and it didn't work out for World Acceptance. As we speak, the shares are down more than 22%. They're headed for their biggest drop in more than 2 years, since July 2019.
It's been on a run, though. It's had a lot of good years. 2020 was up 18%, 2019 down 15%, but if you look at the 3 years before that, on a big run, and it's up, 58% so far this year.
Yeah.
So
giving back a pretty fair chunk of that gain.
Yeah, exactly. All right.
Let's do the electric slide.
Do you do the electric slide when you're at a wedding?
I suppose you could drag me out on a dance floor to do it.
Come on. It's a lot of fun.
Okay.
And then you get to We Are Family, like all the traditional ones.
I know somebody who does the electric slide is Nancy Lyons, and she's standing by in our DC studios.
You do it, right?
Newsroom. Do you, Nancy?
Oh, of course. House Speaker Nancy Pelosi says Democrats are at a decision point on what will be included and what will be left out of their economic agenda. They need to finish work on a sweeping social spending package and take a vote on a separate infrastructure bill. Senator Joe Manchin believes a vote on infrastructure could happen as early as tomorrow. Well, while lawmakers are negotiating details of the president's sweeping agenda, Capitol Hill is facing another deadline: government funding.
Earmarks are back on Capitol Hill, and Senate Democrats have released their final 9 funding bills for the coming fiscal year. While most Republicans declined to participate in the process, the 16 who did stand to take in a disproportionately large amount of money compared to their Democratic peers. The offering could help grease the wheels for a bipartisan government funding bill later this year, which lawmakers might struggle to reach by the December 3rd shutdown deadline. In Washington, I'm Amy Morris, Bloomberg Radio.
Lawmakers are taking a closer look at social media's impact on kids. Executives of TikTok, Snapchat, and YouTube were called to testify in a hearing today before the Senate Commerce Committee. Senator Ed Markey pressed Snap VP Jennifer Stout on a bill he's introduced that would allow teens to limit the amount of data collected.
I think, Senator, we'd love to talk to you a bit more about some of the
we've
issues.
Listen, this is just what drives us crazy. We want to talk. We want to talk. We want to talk. This bill's been out there for years, and you still don't have a view on it.
Do you support it or not?
I think there are things that we would like to work with you on, Senator.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. Somebody who also knew it was the electric slide. I bet she gets up on the dance floor. I know she does. All right, fascinating story by Max Zimmerman about Kathy Wood, of course, the founder, CEO, and CIO of ARK Invest. She says new technologies will help bend the curve on inflation despite recent supply chain bottlenecks related to COVID-19 and oil supply constraints. She talked about this with me when I was at Milken, and we did that one-on-one conversation. She doesn't expect kind of a second round of supply chain problems, but how technology is impacting how things are done and the cost of things in a big way.
Right. She says that inflation has flared in response to COVID-related supply chain bottlenecks, oil supply constraints. But in her opinion, the powerful and converging deflationary forces associated with AI, energy storage, and she has EVs, exclamation point in parentheses there, robotics, genomic sequencing, and blockchain tech will bend the curve. Those are all technologies, disruptive technologies that she's invested in and spoken to you about.
Right, and she was responding to a tweet by Tesla CEO Elon Musk about strong short-term inflationary pressures. He says, I don't know about long-term, but short-term we are seeing strong inflationary pressures. I mean, it looks like they maybe went back and forth a little bit.
They did, yeah.
And Kathy kind of responding to this, not kind of responding. And she says if they expect lower prices, most consumers, businesses will defer purchases, exacerbating a decline in the velocity of money. Despite the burst in cyclical inflation during the last year, velocity is hovering at low levels. If at ARK Invest is correct, the next leg will be down. This is the big debate of our time.
It is.
In terms of inflation.
And I think, I want to make sure I get this right, but last night I was following this conversation along. Yeah, and Eric Balchunas, who covers ETFs here at Bloomberg Intelligence, he just pointed out how cool it was that you could see Jack Dorsey, Kathy Wood, and Elon Musk all talking to one another about inflation on Twitter.
And Kathy Wood uses social media. She and her team are often putting out research, sharing it so that people can comment on it and they can further the conversation. But I agree, right? Like this is where you see the productivity of social media.
Hanging out with some of the smartest people around.
I think it's pretty cool. I want to have like a drink with all of them.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We've got the Dow, the S&P, NASDAQ all advancing. NASDAQ 100 index higher, but the Russell 2000 on the minus side. The Russell 2000 down 0.5%. All about earnings with the Dow at a record up 103 right now, up 0.3%. S&P also at a record up 19, up 0.4. NASDAQ higher as well, up 43 points, up by 0.3%. 10-year yield 1.61%. Spot gold down 0.7%, 17.94 the ounce. West Texas Intermediate crude rallying 1%, 84.63 a barrel. Bitcoin down 0.7%, 62,125 on Bitcoin. Stocks trading at records as earnings help boost sentiment amid lingering concerns about inflation and growth. Lockheed Martin shares, though, plunging today. The company is backing off deals, also resetting its plans. LMT on the ticker. We've got Lockheed Martin down now by 11.5%. After the bell, we'll be hearing from a lot of well-known tech names, including Alphabet, parent of Google, Microsoft, and Twitter, all after the bell. Also reporting Visa. Again, recapping stocks at a record. S&P up 21, up 0.5. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The Biden administration has announced an overhaul of the government's public service loan forgiveness program, allowing tens of thousands who work for government or nonprofits to discharge their loans ahead of schedule. The new policy aims to address flaws that have prevented borrowers from receiving relief they were originally promised. The administration means well, but wide-scale debt forgiveness is the wrong way to encourage students to pursue careers in public service. Under the existing program, more than 1 million workers are potentially eligible, but their chances of realizing its full benefits are slim. Out of roughly 725,000 applicants since 2017, only 2% have had their loans discharged. Under new rules, as many as 50,000 public service workers could receive relief, wiping out $4.5 billion in student loan debt. All this will help redeem the program's original commitment to public sector workers. But President Biden and Congress should work together to make public service loan forgiveness better targeted and more cost-effective. A fairer and more efficient system would benefit student loan borrowers and taxpayers alike. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I don't want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we've got just about 10 minutes left in today's trading session. Tim and I are setting up our Bloomberg screens to get ready for the...
I'm stretching.
For the earnings dump.
Making sure I'm hydrated.
Exactly. Stretching the muscles,
Yeah.
standing for a little bit. Michael Sheldon is with us to count us down to the closing bell as we watch today's trade. We're definitely off our best levels of this session. Michael, by the way, Executive Director and Chief Investment Officer at Hightower RDM Financial Group. He's back with us on the phone from Westport, Connecticut. Do you get as excited as we do about earnings?
Oh, every quarter, of course.
Was that sarcasm? I'm trying to feel that out.
No, absolutely not.
Well, so earnings so far, how does it feel?
So far, we're off to a pretty good start. Heading into this week, about 20% of the S&P 500 had reported their numbers so far, and the numbers, once again, are pretty positive. Heading into this quarter, for reference, earnings estimates were that growth would be about, corporate profits would rise about 28% on a year-over-year basis. And as we stand, again, as of last Friday, that number was up to about 32.7%. And another way to look at it is how many companies are beating estimates and by what amount. So the average company, as of last Friday, was beating estimates by about a little over 13%. And for reference, that compares with an average beat of about 8% going back over the last 5 years. So I think importantly, the trend of companies beating earnings and analysts raising estimates, which started probably in the summer of 2020, at least for now, continues to be in force.
Are companies guiding conservatively and analysts are following that, or are things just better than analysts thought they would be in the last few quarters?
Well, it's interesting. If you look at this transcripts over the past few quarters, there are a number of things that come out. One is companies are talking about higher costs. Companies are talking about supply chain issues. So a number of these factors have been basically talked about for a few quarters now. And I think in terms of profits, corporate profits are important because stocks tend to follow the direction of corporate profits over time. So for all of 2021, we're looking at an increase of about 44% or so. But then that slows down to a growth of about 9% in 2022. So we're still likely to see growth next year, but that growth is likely to be more moderate than we saw this year.
Well, and it is interesting, too, and I wonder when it comes to these supply chain issues, what do we need to be thinking about it as investors? Is it something that I think about our audience? Do we just be like, yeah, okay, it's how a company makes things, but we take for granted, right? We go to a store and we just pick up a product and just assume it will always be there. But are we learning, and maybe do we need to, as investors, really understand the global supply chains that are out there? Just like during COVID, we got to learn what it is to create a vaccine and the steps that it has to take in order to be available to the public.
Yeah, that's a real good point. And we've found out a few things over the past several quarters. For example, that 40% of all our freight comes from the ports in Los Angeles and Long Beach. So maybe individuals are starting to think about other ways that we can bring that freight into the United States. Another example was during COVID, we found out that, believe it or not, a majority of the drugs that are actually consumed in the U.S. come from China. So there are certain things which, as a result of events over the past few quarters, I think longer term that's actually bullish for the U.S. manufacturing sector, and we could have an onshoring or companies returning some business back to the U.S. It's not going to happen overnight, and it's not going to be easy for some companies that have global supply chains. But on the margin, I think could provide a positive boost for U.S. manufacturing down the road.
Michael, it's interesting. Earlier today, we hit intraday records on the Dow and the S&P 500. And if you think where we were 4, 5, 6 weeks ago, what we were talking about supply chain challenges, we were talking about growth concerns, we were talking about inflation. What has really shifted? Because we've seen the market, the S&P 500 higher to the tune of about 6% just in a few weeks.
Well, there are a couple of things. One is everybody was talking about having a 5% pullback in the markets, and up until late October, September, we hadn't had a 5% pullback in one of the longest periods on record. And that dates back to, I think it was October of 2020. So over the past few weeks, we had about a 5.2% pullback in the S&P. And just like clockwork, investors have been buying the dips over the past few quarters, and investors came in. And I think another thing is at work, which is that third quarter GDP, the economy kind of downshifted a little bit during the third quarter. And we're going to get third quarter GDP that comes out this coming Thursday in a couple of days. And it's not going to be such a great number compared to what we've seen recently. But I think that's also looking in the rearview mirror.
Right.
If you look at today's consumer confidence data, for example, that was supposed to be down, but it actually was up. And one of the things that caught my eye, for example, is the Conference Board looked every month when they interview people, they ask, are you more likely, are jobs easier to get or are jobs harder to get? And they take the net of that, and what it shows is that the highest percentage of people found that jobs were easy to get going back to 2000. So if you look at that, along with, for example, some of the weekly claims data, which has been trending lower, I think the outlook for continued job growth is positive, and I think we'll start to see a pickup in economic data, which is why investors have been buying the dips, I think.
Well, we all kind of make a joke of it, but it's really fascinating. Even LinkedIn just, sending tons of emails about the jobs that are available, and they do it based on your profile, but it's a lot every day and pretty aggressive. Hey, is there anything that we could get from the big batch of earnings that we're going to get in just a few minutes' time that could make you more interested or less interested in a Google, a Twitter, an AMD, a Visa, or a Microsoft?
Well, we actually own some of those names already in our portfolios and have owned them for some time. I think taking a step back, we're portfolio managers, but we're also investment advisors, and you want to have some growth, some tech in your portfolios, some technology, because that represents the growth that you need to meet your investment returns. But I think the other thing is that whereas technology was really the main game in town over the past several years, maybe a decade or so, given the broadening of the economic landscape that we see next year, I think you want to have more broad exposure to the markets, a little more of a barbell maybe between growth and value, just a little more broad-based exposure going forward.
All right, good to know, and always good to get some time with you. Michael, be well. Nice to check in with you. Michael Sheldon, he's Executive Director, Chief Investment Officer at Hightower RDM Financial Group, joining us on the phone from Westport, Connecticut. Right now, bouncing around when it comes to the share prices. The equity averages were off our highs and lows of the session. Let's get to it. Our comprehensive market coverage coming up next. We'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close on this Tech Tuesday.
On the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Shonali Bassick in the house, counting you down to the closing bell. Here to help us look beyond that bell. With a global simulcast, we dig into the earnings once again with Carol Masser and Tim Stonewick, bringing together our Bloomberg TV, radio, and YouTube audiences. And Carol, I mean, today was a day where we're dictated by earnings of yesterday, of this morning, when we look at the industrials, when we look at Facebook, and we all brace ourselves for after the bell now.
Yeah, absolutely. Look at this pile of papers. It's all the earnings that are coming after the close. I'm kind of old school with this. But if you take a look at some of the companies that are going to be reporting after the close, whether it's Texas Instruments, up 20% this year. You take a look at a name like Google, it's up 60% this year. Microsoft up 39%. Those are some pretty high expectations, Tim, when it comes to investors. And those companies, if there's some disappointment, you could see some selling.
Yeah, we have seen some of those high expectations be met, though, in the companies that have reported. Of the S&P 500 companies that have reported thus far, 81.3% have been positive surprises, according to data from Bloomberg Intelligence, Taylor.
And it's really interesting when you talk about earnings. We were showing a great chart earlier. Caroline was talking about it. Just some of the valuation, Shonali, of these. Facebook, of course, has been the big underperformer when it comes to valuations. All of the analyst notes this morning that I've read have been certainly on that, but it's Microsoft and Google that, while they're priced at a premium, and is that justified? And I think we find that out after the bell.
Sets that bar even higher. We're also waiting for Twitter and Robinhood, where there's an actual expectation of a decline in some of their performance here. So let's see if they can meet even a low bar.
Yeah. Can crypto not save Robinhood this time? We'll have a little look at how those numbers come out. Great to have the voices across these companies any moment. S&P 500, as the bells ring, is going to look like it's settling up about 8 points. We're up 0.2%. 4,574 is where we finish this trading day. The volumes are up about 6%. Volumes up significantly when you're looking at the NASDAQ. Get this, on versus your 20-day average, we're up 66%, but the moves on the NASDAQ not nearly as large, only up 9 points, less than 0.1% higher. The Dow Jones Industrial Average also only up 14%, less than 0.1% higher, 35,755. Let's check in on the Russell 2000, because it was your underperformer on the day. We finished in the red, currently off by 7/10%, I think that is.
Yeah, and definitely a bunch of bouncing around in today's market, definitely off our highs and lows of the session, even though we ended up in the green. Keep in mind, earnings momentum has really provided support for this equity trade. About 81% of S&P 500 companies have reported better than expected results. That's why this big batch that's about to dump a bunch of numbers on us could really help shape the tone for tomorrow, certainly, and for the rest of the week, Taylor.
Well, you talk about some of these record highs. You continue to see some pretty broad-based strength, at least when you're looking at a sector level, like we always do with our radio audience. We have the sector winners and the sector losers, and there's a little bit of green even in the losers. And so you take a look, and it's, look, transportation, right? How much of that continues to be, Tim, some of the news that we got yesterday? I toss on over to you for some earnings.
Yeah, Texas Instruments third quarter revenue meeting estimates. Got revenue coming in at $4.64 billion, just shy of that $4.66 billion figure the Bloomberg consensus estimates was looking for.
Yeah.
As far as guidance looks, seeing fourth quarter revenue $4.2 billion to $4.58 billion, estimates at $4.48 billion. Caroline, I know you got your eye on Microsoft.
Yeah, we're coming out with its first quarter adjusted earnings per share, $2.27. We're looking at earnings per share, $2.71. That is a beat versus the estimate of $2.07. The first quarter revenue, that fiscal first quarter, $45 billion. The estimate was for 44. So again, it's a beat on that front. And the GAAP results include a $3.3 billion net tax benefit. Interesting as we look towards corporate tax rates and how they might be indeed changed over in the United States at the moment. But here is a company that continues to see product revenue in excess of $16.6 billion. We're seeing growth in the Xbox content and services revenue up at about 2%. And the intelligent cloud unit really, though, is kind of the area, the driving force. And we want to understand how much more market share they're taking there.
Yeah, I'm keeping an eye on shares of Texas Instruments in after hours. They're down more than 5% as investors go through these numbers and digest them. A big beat on the bottom line. Third quarter EPS coming in at $2.07 versus year over year, above year over year $1.45. Fourth quarter revenue coming in at $4.22 billion to $4.58 billion, beating estimates of 4.4, or I should say, coming in less than estimates of $4.48 billion, Carol.
All right, folks, let's get to a big one in the social media space and certainly the cloud space. We're talking about Alphabet. Third quarter Google Cloud operating loss of $644 million. That is smaller than the expectation of analysts. They were looking for a loss of about $935.2. Google services revenue, $59.88 billion. That is a beat, folks. 58.16 is the estimate. Let's get to third quarter EPS, $27.99. The numbers always astound me. That is a big beat. The estimate was for $23.50. Third quarter revenue, ex-TAC, $53.62. And Shonali, I know you've got another earnings, but that too was a beat as well. And you could see in the after hours, we're seeing Google down about 0.75%.
Yeah, let's talk about Robinhood for a second here, because we are seeing a very significant miss in their net revenue. Expected at $423 million, it came in at $364 million. We knew that their revenue was going to decrease with the declines in both activity that we saw on the platform as well as that crypto trading revenue, but this top line has significantly decreased. Their transaction-based revenue, as we know is related to payment for order flow, has increased just a bit here.
I mean, wow, cryptocurrency is increasing 860% year on year, though, to 51 million compared to 5 million in the third quarter of 2020, of course, Shonali. All these numbers look pretty phenomenal on a year-on-year basis, but I'm sure you're looking at it all on a quarter-by-quarter basis.
Well, yeah. and it's interesting to see Robinhood, down about 7.5%, now down about 9% for our radio listeners, and so we're seeing it take a big hit here. I mean, as I said, going into this, the expectations were high. Looking at some of these companies in terms of their reaction, Taylor, you are seeing obviously some disappointment here.
Yeah, really interesting. I'm taking a look at shares of Google. Carol, of course, as you've been breaking those out, just given some of the focus that we've had on Facebook and of Snap and the ad revenue environment and what that means, of course, as we await Twitter, that we know should be coming any moment as well. And you wonder, particularly with that cloud revenue, the lightness and how investors, Tim, certainly digest that.
Yeah, I'm pretty surprised to see the crypto revenue come in where it came in, given the interest that we've seen in cryptocurrency in the most recent quarter. We should note that Bitcoin's price has increased by 40% since the company last reported earnings. But investors still trying to get a feel, as this is a relatively young public company, just going public in recent months.
Yeah, I'm going to jump in here because we're getting Twitter earnings that are out here, and I just want to look at the fourth quarter revenue guidance that does indeed look a little bit light. It's that forward guidance of $1.5 to $1.6 billion. Estimates had been closer to 1.6 at $1.58 billion. But if we take it back to the third quarter revenue also coming in a little bit light, this is similar to things that we have seen this earnings season. Third quarter revenue from Twitter coming out at $1.28 billion, just slightly below estimates of $1.29 billion. They're reporting little effect on the ads, of course, from those Apple privacy changes. That has been a big focus, of course, given what we've heard from Snap, what we have heard here.
How are your Twitter ads? Are they targeted to you, Taylor?
You know, I try to stay off that platform. It's so nasty with all the trolls, but I'll leave my personal stuff out of here. They are saying that a third quarter revenue impact from those Apple iOS changes are a little bit actually lower than expected. So we're getting a lot of it, and they are factoring some of the modest fourth quarter impact from those Apple privacy changes, but reiterating that no changes to 2023 target here of still $7.5 billion in annual revenue.
Let's talk consumer, because Visa coming out with its net revenue. It's a slight beat, $6.6 billion for the fiscal fourth quarter in net revenue, ahead of the $6.5 billion that was expected. Adjusted earnings per share coming in strong as well, $1.62. Their cross-border volumes at a constant currency up 38%. People are back, they're back traveling, and earnings per share is also a beat on the year and improving on a year-on-year basis. So we saw MasterCard, now we're looking at Visa coming out, and they're boosting their quarterly dividend. So that's always nice for the investor base.
Yeah, and listen, this is where sometimes we often see companies, what do they do with that extra cash on hand? They're either doing buybacks or they're boosting their quarterly dividend. We'll see if it does anything to juice the stock. We're seeing it pretty much unchanged here in the after hours. And Visa's what? Little change, I think, up about 6% so far. But it is a great check and a gut check. Remember those American Express numbers? They really blew away in terms of showing people are out there spending a lot when it comes to their platform.
It's interesting. Twitter's coming out and saying that it's still too early for Twitter to assess the long-term impact of Apple's privacy-related iOS changes. Third quarter revenue impact, though, lower than expected. They're pricing in, again, Tim, as we mentioned, a modest impact in the fourth quarter. But perhaps it seems like as they've been focusing a lot on, well, shopping for Twitter and social commerce, we've heard a lot about social commerce, Tim, maybe that's helping sort of offset what otherwise can be, for other companies, a more significant hit.
It's interesting. We still did see Twitter move lower on Friday after Snap announced everything, but Mark Mahaney at Evercore saying Twitter not as affected by those Apple changes because the company relies more on brand advertising than some of the other advertising-supported social media companies, Sonali.
Yeah, you look at Robinhood, I want to turn back to it because the shares are now hovering to the lowest level since its IPO. They gave guidance as well for the fourth quarter, and they said expect no greater, Tim, no greater than $325 million for this current quarter, the fourth quarter, and full year revenues of less than $1.8 billion. Very rare to see that kind of a guidance.
Yeah, we are currently seeing sort of the ongoing digestion of all these earnings and whether indeed Robinhood will indeed fall. So they see their year revenue less than 1.8 billion. The estimate had been for more than 2 billion. So some of these forward-looking guidances falling away from where markets had been hoping for. Microsoft, though, in and of itself, one of the biggest companies out there, and it had beat across the board, whether it's its cloud revenue coming in strong, whether it had been its personal computing revenue coming in better than expected, 13.3 billion. But basically unchanged in Microsoft. I think what you say there, Carol, is it was priced in.
Yeah, absolutely. And I think that's the same thing for Google. It's just up about 2/3 in the after hours. I mean, we did see the company coming out. It's a beat on revenue and EPS, 53.6 billion in net sales. Shares are dropping, though, or were dropping. Now they're a little bit higher. But again, I think you have to put it against the backdrop of what investors have done with some of these names, Tim, in the past year.
Yeah, still keeping an eye on Texas Instruments shares down more than 6% in after-hours trading. The company forecasts revenue for the fourth quarter between $4.22 billion and $4.58 billion. Estimates were $4.48 billion. The company's EPS coming in for the fourth quarter, this is their estimate, $1.83 to $2.07, estimate at $1.94. But shares in after-hours down just over 6%.
And in the horse race that is big tech, we look to smaller tech. Chanel, you've been nailing it here on Robinhood with shares falling down to, well, near the lowest that they've been since the IPOs you mentioned. Certainly looks like waiting on crypto. They talk a lot about the wait list on the crypto wallets platform, but not enough to boost revenue in the meantime.
Listen, guys, you tell me, Visa beating, Robinhood missing. Can the big financial giants do it better than the new kids can?
All right, we did it. Oh, my God. And it's going to be everything we're talking about tomorrow. All right, that's going to do it for our comprehensive and cross-market platform coverage here on Bloomberg Radio, Bloomberg TV, and on YouTube. Folks, we will see you again on Wednesday, same time, same place.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I need a martini.
Yeah.
I need a tech martini. Do they have them in Silicon? Paul Sweeney, of course, host of Bloomberg Surveillance, host of another show you do with Matt Miller. I don't even know the name of it. What is it?
Bloomberg Markets.
Bloomberg Markets.
He does it all.
He does do it all. Wow, a lot. Yes. So where should we start? Where do you think we should start?
I think Microsoft, some good numbers there. You know, it's when you talk about Microsoft, it's such a great Silicon Valley turnaround over the last decade. Just an extraordinary,
true.
You know, Nutella is just amazing. And so I think about the cloud business for Microsoft. It's been such a great growth driver for them, and that continues to be where they invest the money, both operating expenses and capital expenses, and they just put up some pretty solid numbers there. So that continues to be a really good story, and the stock's kind of trading fairly well in the aftermarket.
$20.7 billion in cloud revenue for the quarter. A massive number.
And they were behind, right? If you go back a few years.
They were behind. Amazon is the leader, still is the leader, but Microsoft is a big player, but you got a lot of other companies in there. Google's also a player in the cloud. It's a business, it's probably one of the hottest areas of technology when you think about where the money's going, where
everything in my
going.
life is in the cloud right
Everything's
now.
in the cloud. You know, I don't know where this cloud is, but it's certainly storing a lot of information, and it's getting a tremendous amount of investment from these companies, and in response, they're getting really good growth.
So what is it about Nadella that is just so, I mean, we've done it at Business Week, we've done the cover stories and the stories about it, but what is it?
You know, a lot of people tell me it's the vision. He saw the cloud. He saw kind of where some of their enterprise businesses were going to go. He picked where he thought they had some competitive advantage and then just allocated the capital that was needed. And I kind of feel like maybe I'm just because East Coast bias, but I don't feel like he gets the same reverence from a lot of tech investors that maybe not an Elon Musk, but a Tim Cook or a Bezos or someone like that. I think what he's done at Microsoft is just extraordinary, and so do the shareholders.
Stock a little flat in the after hours, but what I will say is Microsoft's up like 39% so far this year. So, all right, so maybe everybody just is going to have that martini and relax.
Expectations were high, and it seems like Microsoft delivered.
Yeah, absolutely. It's good numbers, and the tech numbers have generally been pretty good so far, I think. I mean, you know, and you could argue that they really need to be because, and the market in general needs strong earnings coming out of the S&P 500 because just where the valuations are. But I would say the tech companies are continuing to deliver.
Where do we go now?
Let's go to Twitter.
Yeah.
Let's go to Twitter. So for fourth quarter revenue, for those just joining us, Twitter is saying that it's going to be between 1.5 and $1.6 billion. Estimates were at $1.58 billion. The company sees capex at 85 to 135. Estimates were a lot higher, 263 million. What do you make of? Well, go ahead.
It's a little lower in the after hours, just like 0.4%.
Yeah. So you know these social media stocks have been under a little bit of pressure. We had Snap last week. You remember they reported numbers that on the revenue. So
never forget.
Disappointing. Yes.
Yeah.
And we saw some of that from Facebook. And we saw a little bit of that here from Twitter. And I think what's going on is what we've heard from Snap seems to be echoed by some of these other companies, which is, you know, the tweak that Apple made to its privacy settings limits, arguably, at least in the short term, the efficacy of some of this digital advertising on some of these places like Snap, like Facebook.
How many of you are saying, like, I don't want the ad? Like, right?
Totally.
I got to tell you, Caroline asked Taylor in our simulcast just now if the ads are targeted to her on Twitter. I'm still getting ads. Carol and I were in California last week. I'm getting ads right now on my Twitter feed, on my PC, that are targeted towards somebody who lives in LA.
Yep.
Like,
they know where you are.
They know where I was.
That's right.
They don't know where I am, and that's an issue.
That's an issue. I think it's a relatively short-term issue. From what I'm hearing from Silicon Valley, there are workarounds to this for a lot of these sites. The other thing is just, hey, maybe some of my advertisers, my big advertisers, they're pulling back a little bit on their advertising because I don't want to create demand for a product I can't deliver.
Right.
So let me pull back on my advertising, save that money for the bottom line. So I think that's what we're seeing. For Twitter, the bigger issue, I think, for a lot of investors is where do they fit in the social media fabric? They're not this big Goliath.
That's still the question.
It's still the question. 385 million users. Not big enough, I guess, when you can go to Facebook and Google and now Amazon.
I think a lot of questions on the earnings call will be about Twitter's product and to what extent the company has seen actual progress in the idea of super follows.
Well, speaking of that, they're going to put more focus on potential for shopping on Twitter.
Yes.
That to me is, I mean, Instagram does it really well.
Right. And that's a big thing. That's one of the things Facebook would love to monetize its WhatsApp with some purchasing, with some e-commerce. And I think, for a lot of people that started out, for a lot of these companies that started out as advertising only, they're thinking about other ways to diversify their revenue stream. And it's a great story. The advertising story is still a long-term story. Digital advertising taking a bigger share of the total ad pie on a global basis. That's still a great story.
Right.
But how else can I monetize this base in the case of, Facebook, a couple of billion users?
It is kind of amazing that you have this thing that is so ubiquitous, right? And I like it.
Yep,
I use it a lot, and I find a lot of information there. But just how they monetize it, right, going forward. And is it an Amazon story that just they have to keep building, and all of a sudden explode? Like, I don't know.
I think for Twitter, what investors would like to see, but I think they're becoming resigned that they're probably not going to see it, is I need more user growth.
Yeah.
Have they kind of tapped out their market here? So that's one of the questions. And if you're not going to grow the users, you got to grow the revenue per user you have. So you've got to make it more relevant for advertisers.
Is that ARPU? What do you call it?
Yeah, or average revenue per user. I love that. Perfect. And so that's kind of another driver there. So if he can't, so I think investors are less confident that this company can execute on that. So it's really susceptible to their quarterly numbers.
You have to think about it in the context of Facebook, and which we heard from yesterday. Twitter is tiny compared to Facebook, a tiny player.
But I don't know, the engagement is
AMD was
so
tiny
high.
compared to Intel
That's
one
right.
day.
Yeah. That's right, exactly. And AMD, some more good numbers there. So
Can we talk Google? Did we talk Google yet?
No, let's talk Google.
Stock's down about 0.5%, but again, this is one that is up 60% so far this year.
Yes.
What do we need to know about Google?
Boy, I mean, the Google story, again, they're going to be grilled on their conference call about just, are there any challenges, headwinds to their advertising model, much like we saw at Facebook here. But I think that the Google story, people feel really good about search. It just remains such a strong business. They've obviously mastered the switch to mobile. And now it's, oftentimes for Facebook, it's a question of expense growth. And when are we going to get, it does deliver great margins, but a lot of investors out there feel like it can deliver even greater profitability.
I'm looking at the live blog on Google right now, or Alphabet, excuse me.
Yep.
Alphabet's advertising revenue jumping significantly since last year to $53.1 billion from $37 billion. That's a jump.
Yep.
But so too did the price the company pays to partners to aid that growth.
Yeah, so that traffic acquisition costs are the things, you have to, that's kind of just the fee. It's an
Jumped
average, it's a fee.
40%
Yep,
to $11.5
right.
billion.
So we look at revenue ex-TAC.
Apple would like to, Alphabet, the parent company of Google, would like to see that number get lower.
That's right. That's right. And so, but I mean, you're paying, and who's getting most of that TAC is Apple.
Yeah.
Right.
So the default browser in Safari.
Exactly right. So no, but the Google story is very much intact. I think people feel very good with this top line growth story. And again, the cloud is a big and growing part of their business too.
44% over the year.
It's absolutely part of the mix there, and it wasn't really 7-8 years ago. But they've established themselves as a player, arguably the number 3 player, but in a business that is as big as the cloud and growing as quickly as the cloud. It looks like it's kind of a triopoly now.
We haven't really broken down AMD because I think we missed that while we were with our TV team. Stock is up about 1.1% in the after hours, and AMD coming out fourth quarter revenue projection 4.4 to 4.6 billion. That's above the estimate of 4.25 billion. They also, in terms of the third quarter, revenue was a beat, 4.3 billion versus 4.12 the estimate. Third quarter adjusted gross margin. This has been important, 48%. The estimate was 48. They are being looked at. It keeps growing, and there was expectations it could go and hit 50% this quarter, but if not, maybe next quarter. But that's interesting because Intel has been struggling with gross margins.
Intel's been struggling with gross margins, and AMD has generally done pretty well here. I think when you think about the chip market, it's a cyclical business, has long cycles, long lead times. But the more immediate issue has just been the chip shortage. I mean,
what did you say? No.
When can we fix this? I mean, how long does it take?
Years. Yeah, it takes 3 years to build a plant.
But my point has always been, okay, you had to shut down the plants for a certain period of time, and the just-in-time inventory aspect, that's got really screwed up. Okay, but now we flipped the switch back on, and okay.
Could we have a glut soon?
Can we have a glut soon? I mean, it was shut down for 2 or 3 weeks. We've been open for 2 or 3 months now. Why are we still hearing big buyers like GM, like Apple saying, and those are the big buyers that should get whatever they want, still having trouble getting their chips?
That's a good question.
It is a good question, and I think there are a lot of investors and analysts on the call will ask about that, about inventories. So what do inventory levels look like? Are companies ordering too much so they're hoarding?
That's right, yep.
And does that lead to a supply issue?
Right. And there have been stories where Intel and AMD has said, listen, we need a better inventory of what you have. But my point is, don't I already know what I shipped to General Motors or Apple or whomever?
Right.
So
that's a good
still
point.
In the storeroom, though.
Right.
Hey, AMD also, when they talk about their fourth quarter adjusted gross margins, again, this is Outlook, they're looking at about 49.5%, so just below that 50% mark, but nonetheless still growing. And I think, let me just do a quick check on AMD here in the after hours. Stock is up 1.5%. What are we leaving out? What haven't we covered with?
We covered all of the companies that we wanted to talk about.
Robinhood? Do you look at Robinhood?
I don't look at Robinhood, although only thing when I go look at the Robinhood results, I'll simply look at the activity level, just in terms of how much.
A lot of crypto activity, apparently.
That's right. It's a lot of crypto, but is it a meme bubble, or is there building demand that's really there?
That's the question. Yep. And I think that there is disappointment with the crypto numbers that the company reported, because the rise in the price of Bitcoin that we've seen that coincided with their latest earnings report that should for all intents and purposes, lead to more people doing more trading.
Right, exactly.
Yep.
And I guess we shall see. Paul, you've covered the tech space. You were an investment banker. Like, you know this world. You've seen the cycles, kind of where we were years ago and then kind of where we are today. And I think about the importance it is to the financial markets. I mean, we're right to focus on these companies because they are increasingly our economy.
Absolutely. I mean, earlier today and last night was a lot of the old industrial companies, 3M. This morning on Surveillance, we were talking about that. And I said, boy, we haven't talked about these names, General Electric, 3M, names we haven't talked about in a long time. But the reality is, this is the future. This is where the market cap is, certainly. And this is where the performance is for fund managers. If you don't get tech right, it really doesn't matter what else you do. And they are such a big part of our economy, such a big part of our GDP, and such a big part of the stock market. So, and that is where we're seeing the innovation, where we're seeing the value creation.
Yeah, absolutely.
Help us to look at this holistically if we take into account each of the companies that we talked about: Microsoft, AMD, Twitter, Google, and the parent company of Google, Alphabet, I should say. How do you describe this afternoon?
I just say these are companies that are delivering really strong top-line growth, and that's what I think most tech investors look at. Yes, they look at margins, but it's for a lot of these companies, it's simply the top-line growth, because a lot of investors are looking at total available market size.
Right.
And they see these markets growing, whether it's the cloud or whether it's digital advertising, and they want these companies to go out there and get as much share as possible, a la Amazon. That's what Amazon was able to do to this marketplace, is to say it's important to go for the growth. We'll get you to profitability later. Amazon has certainly done that.
Right.
Now, a lot of these companies, whether you talk about Google or Microsoft, they already have just great margins and great free cash flow. And people feel pretty good about the moats they've built around their business. So that's why they get some of the valuations that they get in the marketplace.
Hey, guys, I just want to bring you a headline. I just want to jump in. Pfizer COVID shot for kids aged 5 to 11 getting the FDA panel's backing. So the benefit of the shot likely outweigh risks. That's according to that FDA advisory panel. So again, a 17-0 vote in favor of the Pfizer COVID shot for kids. That's a big one. If you think about the CEOs that we talk to and they talk about the things that they're concerned about, it's the pandemic and the impact that that can still have on our world.
Yeah, and right time for Halloween.
Exactly.
But I talk to the parents who've got, I don't have children of that age group, but the parents who do, this is the last thing that needs to be, the last hurdle that needs to be cleared for a lot of families getting back to what is more of a normalized life.
I'm still waiting for the 5 and under. 4 and under, I should say.
That's what you got, a little critter at home.
Yeah.
It's a little one.
I'll do 5 in no time.
Just want to point out in the after hours, guys, it looks like the outperformer is Microsoft. It's up 1.25%. Google's pretty flat here in the after hours. Let me just do another check.
AMD is 1.5% higher.
And Twitter, I'm just taking a quick look, and Twitter, is up about 1.33%.
Good.
Yeah, right?
Yeah. So, I mean, when the Snap reported their results last week, all those social media companies, their stocks all came down, got that priced in. And now anything that's not incrementally worse than that, I think the market's giving these stocks a little bit of a bump.
Yeah, now up about 2%. You are amazing.
Fun. It's earnings time.
You're all warmed up for the morning.
That's right.
We'll just rewind,
Well,
Paul, and just go in the morning.
He's going to be working all morning, like early morning for really early
he's
earnings.
used to it.
And then he's coming on.
Then we're coming to Quick Take.
He's coming on Quick Take stock. Yeah.
Yeah, that's gonna be fun.
Yeah, I got it on his calendar.
Yep.
Absolutely. All right, good. Thank you so much.
My pleasure.
We know you have a
Anytime.
long day,
Anytime.
and that was fantastic. Our Paul Sweeney, he is co-host of Bloomberg Surveillance, co-host of that thing he does with Matt Miller.
Yep.
Bloomberg Markets is what they call it. We are watching that slew of earnings that reported after the close. Right now, Twitter's up about 1.75%. Google just down a hair, down 0.3%. We've got Microsoft up 1.2%. Hood, I think, continuing to sell off in the after hours. We saw it down roughly about 9%. Let me just see if I can bring it up in time. It is down 9%. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
He's getting a little snack because he's exhausted from that
if you're
earnings
watching us on
deluge.
YouTube, then you know. Yeah,
Tim's
we got good snacks here. I just had some cashews.
Oh my goodness. We're going to talk about women in STEM and technology specifically. We've just talked so much about so many of the big tech companies reporting their earnings. We're seeing Twitter up 3% in the after hours. We're seeing Microsoft on the move up almost 2% in the after hours. Google's down about 1%. But what about women when it comes to their presence in some of these big tech companies?
Yeah, we're going to be speaking with Ann Chow, the CEO of AT&T Business, in just a few minutes. In the meantime, a check of the business news and trading day. Here's Charlie Pellet.
Hi, thank you very much. Here's what's going on. Let's begin with Pfizer and BioNTech. The benefits of a COVID-19 vaccine for young children made by Pfizer and BioNTech exceed its risks. This according to a panel of U.S. experts, putting a shot for the youngest school-age children on track for a likely clearance. Lots of earnings. We begin with Robinhood tumbling 9%. Third quarter revenue missed. Twitter reported third quarter sales and user growth that was in line with analyst estimates, a sign the company's ad business is weathering Apple's new limits on consumer data collection. Little changed, up by less than 0.5%. Google parent Alphabet reported quarterly sales that topped Wall Street estimates, boosted by steady ad spending and the internet giant's growing e-commerce focus. Last check on Alphabet down by 0.4%. Microsoft's cloud-based software helped drive robust quarterly sales and profit growth that topped analyst estimates for an 11th straight quarter. Shares up by about 2.5%. And Texas Instruments reported third quarter revenue that did miss estimates, down now by just about 4.8%. Well, as for the earnings backdrop ahead of all of these reports, Michael Sheldon, Chief Investment Officer at Hightower RDM, was interviewed right here on Bloomberg Business Week.
So the average company, as of last Friday, was beating estimates by about a little over 13%. And for reference, that compares with an average beat of about 8% going back over the last 5 years. So I think importantly, the trend of companies beating earnings and analysts raising estimates, which started probably in the summer of 2020, at least for now, continues to be in force.
And this headline from the Bloomberg Professional Service involving AEP, that's the electric power company, going to be selling off its Kentucky operations to a unit of Algonquin for $2.84 billion. Stocks higher, in fact, records for the Dow and the S&P. S&P up 8, up 0.2%. The Dow up 15, up less than 0.1%. NASDAQ up 9, up by about 0.1%. 10-year yield 1.60%. Spot gold down 0.8%, down $14 the ounce at $17.93. West Texas Intermediate crude up 0.9%, 84.46 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Black and Hispanic workers remain underrepresented in the science, technology, engineering, and math. We're talking about the STEM workforce compared with their share of all workers. That includes in computing jobs, which have seen considerable growth in recent years. You know that. This is statistics and data and research coming from Pew Research Center earlier this year. Tim, they also found that current trends in STEM degree attainment appear unlikely to substantially narrow these gaps. So basically, these gaps will continue.
One thing we talk a lot about is how to decrease those gaps, how to narrow those gaps. We're going to do that with Ann Chow, the Chief Executive Officer of AT&T Business. She joins us on the phone from Texas. Ann, how are you today?
Oh, doing very well, Tim. Thanks so much to you and Carol for having me.
Well, one thing that we really wanted to talk about was how you do narrow this gap that Carol referenced. How do you do that in general, and how are you doing that right now at AT&T Business?
Yeah, well, Carol, this is a huge passion area of mine. Obviously, I'm a woman in STEM. I actually have 2 daughters who are college age who are also aspiring women in STEM. And I feel that every organization really needs to take a full talent life cycle approach to this. So this is not just simply about how you recruit and how you bring in talent to your organization, but it's really about how you continue to develop your employees and your team members throughout your career. And really, one of the things I think that we have certainly seen and experienced over these last 2 years is how critical a role technology continues to play in every industry, in every business of every size. And so one of the big misnomers I think out there is that you need to have a super technical degree to be in technology, which is not necessarily true in many ways. Each person has an opportunity, regardless of industry, to touch technology in some way. So I think it's really a full circle approach to it.
Yeah, it's interesting because, they talk about girls, younger girls, how they're interested in things like math and science, and it's kind of a much more level playing field when they're younger, and then things happen as they get older. What is it when it comes to society that we can do better? I'm a daughter of an engineer, and my dad was kind of like, you can do whatever the heck you want. But it's also my older siblings versus me definitely grew up in a different world where women were welcomed into doing, whatever they wanted to do.
Yeah, Carol, I think you hit the nail on the head in terms of there is more work to be done, and we can all do our part. There is a lot of data out there which says that there's really no difference between boys and girls as it relates to their science and math aptitude, right? But what starts happening in about junior high is that there starts to become a divergence of interest, right? A lot of the research says that some of it has to do with societal biases and societal pressures on girls in terms of, popularity, being smart isn't cool. I remember, quite frankly, being called a geek, right, throughout my childhood, and it was something that I found embarrassing, but it didn't stop me from pursuing math and science because I was good at it and I actually enjoyed it. But there were a lot of stereotypes and pressures around that. So what I feel we can all do is take a deeper interest in cultivating diverse youth, if you will, right? Not just women, but from underserved communities, whether it's the Black community, Hispanic community, otherwise, and really invest in programs, really invest in early educational programs. I once served on the board of the Girl Scouts of the USA, and one of the things that I'm so proud that we advanced under the leadership of Sylvia Acevedo and continuing on today is a whole set of STEM badges in the Girl Scouts. And AT&T has had a long, proud relationship with the Girl Scouts. In fact, just last year we contributed $1 million to them in support of family STEM events for councils that serve young girls in Hispanic communities as well as other initiatives. So, really cultivating that interest in science and math early on and encouraging girls and others around it is so key.
And hang on for a second. We're going to do a little bit of news, and then we'll come back and continue the conversation. Ann Chow is with us. She's Chief Executive Officer at AT&T Business, joining us on the phone from Texas. So we'll continue with that. I also want to get her idea on kind of what the business environment is right now.
Yeah, as the CEO of AT&T Business, she's responsible for 5G, IoT, collaboration, edge computing, cybersecurity, and stuff that's a big deal to AT&T's top line, 20%
stuff that we nerds really get into. I'm okay with that.
Nowadays we are, but as a kid I wasn't.
I know. It really was a rough thing to be called that when we were younger. All right, never a nerd, but knows the electric slide is our own Nancy Lyons. She's got to check on world and national news. Hey, Nance.
Thanks, Carol. An FDA advisory panel is recommending the use of the Pfizer-BioNTech vaccine in kids from ages 5 to 11. The shot would be about a third of the dose given to adults. If the FDA and the CDC both agree with that recommendation, shots could begin next week. Executives of Snapchat, TikTok, and YouTube today assured a Senate Commerce Subcommittee they are taking steps to protect the privacy of children and teens and presumably should not be painted with the same brush as Facebook.
Among other issues, Jennifer Stout, vice president of Snapchat, was questioned about anxiety-ridden teenagers who were able to get pain pills laced with fentanyl with fatal results.
We are absolutely determined to remove all drug dealers from Snapchat. We have deployed proactive detection measures to get ahead of what the drug dealers are doing. They are constantly evading our tactics, not just on Snapchat, but on every platform.
Senators of both parties are also writing bills to restrict the use of algorithms to keep kids glued to their screens and profiling them to target advertising. In Washington, Irv Chapman, Bloomberg Radio.
Law enforcement officials in the U.S. and Europe have arrested 150 people and seized more than $31 million in an international drug trafficking investigation stemming from sales on the dark net. DEA Administrator Ann Milgram says the pills they were peddling were fake, yet still sold.
These pills, some of them contained fentanyl and some contained meth.
We are now seeing these counterfeit pills being sold in every single state in our country, and we are seizing them at record rates.
Milgram says those using the dark net to hide are now out of luck. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic in our Interactive Brokers studio. We are on YouTube. Hello, everybody on YouTube. Nicholas Comfort, been covering the Saudi Arabian flagship investment conference. It's the Future Investment Initiative, FII, and it's been a who's who of the financial sector.
Yeah, including none other than Stephen A. Schwartzman at Blackstone. This story about how Blackstone had trouble recruiting women until it asked why the prospect of joining the firm was turning them away. This is according to comments made by Steve Schwartzman at the flagship investment conference.
Here's a quote. Like many people in finance, we were having a lot of trouble hiring women. It was a male-dominated business, and we made a decision to change that in 2015. He goes on to say, and again, a direct quote, we analyzed it, and what we realized is that women weren't applying to Blackstone. We tried to find out why, and we found out that they were scared of us. I don't think I'm very scary.
Here's what's so interesting. Fellow panelist Anna Botín was quick to jump in and say that what's scary is to be the only woman always surrounded by men. The Banco Santander chairman was the only woman on the 8-person panel, although the conference was opened by female speakers.
Drop the mic.
Right.
I mean,
8 people on the panel, 1 woman. They're talking about gender diversity.
And this, people far smarter than I have made have made the point that we tend to hire people we feel comfortable with, and I think for years men felt more comfortable potentially working with other men, and there was definitely the boys' network, and we see that playing out. And as a woman in an industry which I think has been fairly welcoming, definitely to women, it can be tricky though. You're still surrounded by a lot of men.
It can be, and we should note that Stephen Schwartzman said these things are possible. You have to identify what the blockage is and go out and address it. So you have to have people around you who recognize there's a problem,
Right.
identify there's a problem, and ask the question, why is there the problem?
And do something about it. Right. Why is the problem? And then how do we fix it and
But
change
how
it?
do you get those people around you?
Exactly. Well, it's a lot of hard conversations that has to do with all diversity and inclusive issues. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of after-the-bell earnings. We begin with Twitter. It reported third-quarter sales and user growth that was in line with analyst estimates, a sign that the company's ad business is weathering Apple's new limits on consumer data collection. Shares up now by about 2.2% on Twitter. Google parent Alphabet reported quarterly sales that topped Wall Street estimates. Its shares trading lower by 0.6%. Microsoft higher by 0.9%. Its cloud-based software helped drive robust quarterly sales and profit growth that topped analyst estimates for an 11th straight quarter. Also reporting after the bell, Robinhood, its shares tumbling now 8.6%. A third-quarter revenue miss there. Stocks higher. The Dow, the S&P at records today. Stocks getting a lift from earnings. S&P up 8, up 0.2%. The Dow up 15. Late day fade, but still up 0.1%. Also at a record. NASDAQ up 9, up by about 0.1%. 10-year yield 1.60% on the 10-year. Spot gold down 0.8%, lower by $14 the ounce to $17.93. And West Texas Intermediate crude up 0.9%, 84.48 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Bloomberg Business Week is brought to you by Withum. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Withum.com for more.
All right, we're talking with AT&T Business CEO Ann Chow. She's still with us on the phone from Texas. And one of the things that's really cool that you're with us is AT&T, and your division in particular plays so much into the future, whether it's IoT, Internet of Things, Internet of Big Things, mobility, 5G, fiber internet. I mean, these are growth areas. What are you seeing in terms of the business outlook for those in particular?
Yeah, no, we're super excited, and thanks for acknowledging that, Carol. You know, when we think about what's happened over the last couple of years, there's no question that connectivity is everything. Right? We like to call this, we're about to enter the age of, the golden age of connection and connectivity, and that is what AT&T does. We create connection. What we're seeing in terms of business climate is just increasingly more demand for hybrid connectivity, right? I mean, there's more data out there. Customers want more personalized experiences, right? Every business of every kind is looking for more data, more information, and what that means is that you need more connectivity-based solutions, secure solutions, if you will, out there. One of the most exciting things that we're working on is 5G and 5G-enabled solutions. The characteristics of 5G will enable industries to transform. I mean, we're starting to see it already. We have been working with dozens of customers in various proof of concepts since we launched 5G a couple of years ago on really disruptive type of solutions, whether it's in the smart factory. We just recently had an announcement with Ford around bringing 5G to their electric vehicle production and how that will dramatically transform manufacturing. And the EV arena, we've been working with various healthcare companies as well. And this goes far beyond telehealth, but to remote patient monitoring and the management of pain.
It's massive, right?
Well, the thing is, Ann, I've been talking about 5G for years, and we've been promised a future with 5G. We're seeing 5G roll out in many parts of the countries. When are we, as consumers, actually going to start to see the benefits beyond that 5G connection on your new Android or Apple phone?
Yeah. Well, one of the things, Tim, is, and thanks for asking that, one of the things that's most exciting about 5G, it's so much more than speed, right? But the characteristics of 5G that enable these different types of experiences are low latency. Think of that as the response time as well as mass connectivity. And so what we as consumers will experience will be manifested through different businesses, whether it's in our healthcare experience, whether it's our education experience. We've actually launched several projects with various higher ed institutions, universities, whether it's Purdue, University of Miami, University of Missouri, around how does the education experience change on campus when it's enabled by 5G and edge computing. And so we as the consumers will continue to benefit from many of those industry transformations and industry disruptions, whether it's in healthcare, education, retail, or otherwise.
Hiring. So you guys are enthusiastic. There's a lot going on. There's growth. Are you able to hire everyone and that you need to hire right now? And if you are hiring, are you having to pay up for them?
Yeah, so Carol, for sure, right? We are out there in this war for talent. There's no question about it, right? Tech talent is so critical, and every company, as I said before, needs technology talent, whether that's in cyber or otherwise, IoT or otherwise. And so we are out there, we are hiring, and we feel very good about our value proposition for that talent out there. I think it's really all about purpose. How you attract talent is really creating a purpose with your business that aligns with that talent's purpose. And in our world, it is really about connecting with greater possibilities out there. I mean, you pointed it out, Carol, a moment ago. The businesses that AT&T's are in are relevant today. We are working with organizations of all shapes and sizes to create the future, and that's an incredibly powerful and, quite frankly, differentiated place to be.
But at the end of the day, so many potential employees are looking also for compensation. Do you have to raise compensation in order to attract and retain talent? And if yes, how much?
Yeah, no, we are absolutely all about being market competitive, and as the market moves, we move as well. And so, Tim, we're out there to compete for the best talent, and the great thing is with our commitments to diversity, equity, and inclusion, we have long been a leader in our culture and who we are out there, and so we're able to attract great diverse talent here. But it is not without competition out there, as is every facet of business today.
Hey, listen, before we go, and one thing we do want to ask you, and we know because we get questions about it here, is there's been reports about AT&T's ownership of the One America Network. You guys have come out. AT&T has denied that it's responsible for funding the far-right media network, or at least most of it. I just want to ask you, because you really think about leadership. You're a woman. You're an immigrant. Conservative networks have been very critical of immigration policy. How important is it, though, when it comes to leadership and what a company stands for, when it comes to topics like immigration or diversity and inclusion?
Yeah, so you're right. Just Carol, quick thing there. I'm the child of immigrants, right? So I'm a second generation American, but for sure,
correct.
For me, right, as a diverse female leader, it is vitally important to work for an organization that has a culture of diversity, equity, and inclusion and belonging. And there is a reason why I've been at AT&T for 31 plus years, and that is that I have been able to thrive, that the values of the company and the principles of the company align with mine, right? And they are, there is no question about AT&T's integrity, AT&T's credibility, and our value set. And it is one of the reasons why I've been able to be successful, right, as a woman in STEM, kind of when we've started this whole conversation. And it is vitally important, I think, not only for people of my generation, but of generations, as we just touched on, that are in the talent pool now, that are graduating from schools, that are out there, in the market, that represent our next generation of leaders. And so culture and purpose and values and integrity and ethics are absolutely paramount.
And we appreciate you going there and being upfront about this. It's so important when it comes to leadership, and certainly in today's environment. And thank you, Ann Chow. She's Chief Executive Officer at AT&T Business, joining us on the phone from Texas. Quick rehash, a ton of earnings. Right now, Twitter is up 3.3% in the after hours.
Robinhood is down by 8.1% in the after hours.
Google's down about 2% in the after hours, and that despite some beats, but nonetheless, we're seeing a pullback. But keep in mind, Google has been on a tear this year, and so the expectations were pretty high. We've got Microsoft just up about 0.5% here in the after hours. Yeah, we're
seeing some interesting after hours activity when it comes to Texas Instruments too. Some big trades happening that are moving the stock significantly, but now off of the lows, just down 3.5% in after hours.
Alphabet saying it sees reopenings driving the retail ad growth, and sales did top estimates after ads and e-commerce were fueling growth. So these will be shaping our stories, certainly when it comes to the Wednesday trade.
And more earnings later this week. We got Apple and Amazon on Thursday.
Some big ones still to come. All right, everyone. We'll be watching the markets for you and covering it. For Tim Stanovic and the whole Bloomberg Business Week team, have a good and safe evening.